right now, there's so much money to be made in the AI space.
I'm actually leaning into AI almost everywhere.
This is about risk management, but maintaining exposure to AI.
On the tech front, we still see structural opportunity.
It is very, very hard to just make the worst case scenario assumptions and make that your base case.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, it's day one for Kevin Warsh, the incoming Fed chair, gearing up for a ceremony at the White House, joining an increasingly divided committee hit by the ongoing energy shock and a bond market pricing out cuts and beginning to price in hikes. The chairman facing an early test.
And right now the market is saying that he has some work to do. Even if it isn't necessarily hiking rates, it's at least giving a credible perception that he is willing to do so, even though this market believes that he is hampered by the president. I will just note that he is facing the highest yields on 10-year treasuries coming in on his swearing in date of any Fed chair going back to Alan Greenspan in 1987. It gives you a sense of how high the bar is for him to tame some of the inflationary expectations.
Bond yield to the long end of the curve, close to multi-decade highs. You want some good news for the incoming Fed chair? The president just turning down the volume, dialing back the heat just a little bit going into this.
Yeah, he told the Washington Examiner he's going to let him do what he wants to do. And then into another interview in Fortune magazine, he acknowledged that the war has impacted prices. And he said that maybe he'll have to look at the figures after the war is done. You mentioned Alan Greenspan, 1987, where yields were. That was the last time we had a swearing in at the White House. What I've been told is that this isn't some normal swearing in. Some executives are going to be there, ambassadors, high-profile people were invited to this. The president wants to make this a very big event.
Energy at the heart of this debate right now. Check out Crude this morning. Brent and WTI. Brent at 105, WTI at 98. It's Bramo's favourite subject. According to Iranian media, we've narrowed the gaps to some extent. According to Reuters, they want to keep the uranium. According to everyone else, Iran's discussing with Oman a permanent toll system, so this is going really well.
Okay, just to be clear, I think this is an incredibly important story. I just hate talking about it because there's no edge, and ultimately what you're looking at is people saying we're close, and then you hear any of the details whatsoever, and they are as far apart as ever. It's a question over the uranium and a question over the toll for the Strait of Hormuz, and in the meantime, you've got an increasing number of oil strategists saying we will run out of oil and it will be a crisis. So you put this together, and it's sort of an existential overhang without a real compass as to how close we're going to be to get there, with a lot of rhetoric trying to make us think otherwise.
The one good thing I love about D.C. is I ran into Halima Croft literally in a hotel lobby. And she reiterated what I heard from Marita Sen yesterday, which is that everyone is focused on June. And that is the concern where we start to hit really the bottom levels when it comes to the inventories that everyone is living on right now.
Crude this morning, high by more than 2%. Coming up this hour, Brian Levitt of Invesco as Wall Street looks to cap off another winning week. Pierre Ferragu of New Street Research on SpaceX's push to go public. And Krishna Guha of Evercore as Kevin Warsh takes the reins at the Federal Reserve. We begin this hour with stocks pushing higher. The S&P on track for an 8th consecutive week of gains. Brian Levitt of Invesco writing rising markets have diverged meaningfully from underlying fundamentals. Brian joins us now for more. Brian who? Brian Levitt, sounding a little bit bearish with that quote. Explain yourself.
No, I'm not bearish. I'm trying to think where that quote actually came from. I'm quite optimistic. If you think about are we diverging from fundamentals? No, we've had 6 straight quarters of double-digit earnings growth. So it's a market that has, fundamentals have actually been quite strong. Perhaps when you're starting to say fundamentals a little bit, it's obviously where rates have gone, it's where energy prices have gone. You would think that perhaps you might have seen some type of volatility around it or some headwind around it, but the markets have shrugged it off. Equities, all-time highs, credit spreads tight. So we've backed out 3 rate cuts and added 2 rate hikes, and the markets.
Where's the insulation coming from? Where do you think it's coming from?
It's coming from corporate earnings. It's coming from the fact that businesses continue to produce what the market wants, and forward guidance continues to be good. And it's coming from the fact that you do not have a particularly over-levered corporate sector. You have sound fundamentals within the corporate sector. And so you're not seeing a market that's responding particularly negatively to some of these risks that are lurking out there.
Is there a fear that we've seen the peak in terms of the acceleration rate in some of these AI names, especially as they cash out with IPOs?
Yeah, there's some risk of that. What the market starts to, what you hope the market gets more hopeful of, and was really in the second half of 2025 and the beginning of the year was that you'd start to get more of a broadening out as you move from, who's going to make AI possible to who's going to build it out to who's going to benefit from it. And we had a very nice story coming into the year. I remember saying to people, if you're not bullish now, I don't know when you would be. For the second year in a row, we got disrupted a bit by a policy decision, one being Liberation Day, this one being the war. But it's a market that is looking at reasonable growth, expected productivity gains, and corporate profitability.
Are you excited to buy into all these IPOs? SpaceX,
No.
OpenAI, Anthropic?
No,
Who's
I
next?
suspect I'll own them because of my passive index exposure in certain places. But no, I'm not overly excited to buy them. I think that what ends up happening is you get a lot of excitement around these things. You get valuations that are elevated, particularly on a SpaceX. You'll get a valuation that's about expected future growth, longer duration, well off in the future versus what's being delivered now. So obviously the internet provider part of it is generating revenue for the business, but some of the other things, some of the other optionality you have on it is way off in the future. So no, not overly excited, but I'm going to have exposure to it as a result of some of the positions that I have.
Does it worry you that the fundamentals seem to have broken down when it comes to the yield backdrop versus some of the incredible enthusiasm for, not PE multiples, because it really has come from the earnings, but just the flight into risk assets that seem completely divorced from the underlying inflation, the underlying economy, the underlying skepticism coming from the rank and file?
Well, you want to break down what's driving the move in rates. And I think there's just perception that it's coming from higher gasoline prices and a big move in inflation expectations. In fact, inflation expectations have been relatively benign over the last few weeks. You had a big move earlier in the year. I was so happy with 2.25 5-year inflation break-evens. Moving to 2.6 is not ideal, but it's still relative price stability where I come from. So you have not seen it move substantially from 2.6 on the 5-year, which is fine. So in essence, what else is driving it? A little bit of growth expectations, which is good, but also term premium because of expectations of the Fed. Now, I don't think the Fed's raising rates. I don't think the Fed's raising rates with 2.6 on inflation expectations and with the economy likely to moderate a bit as a result of all of us paying $80 to fill up our gas tanks. So I think the Fed is on hold. And I think ultimately a Kevin Warsh Fed would like to see 3% on the funds rate. Now, it doesn't mean we're going to get there immediately, but I think ultimately an easing bias will come back into these markets. And so I suspect the equity market and the credit market are looking past this, 40 basis point move in the 10-year.
$80 to fill up your tank, depending on where you live.
Depending on where you live, yeah.
It's actually higher in some parts of this country. You actually don't...
As my friends in California always tell me.
Yep. In California, taking some shots overnight at Chevron, telling consumers actually...
It makes sense of that.
Yeah.
What is the California governor doing taking shots at Chevron when California is paying so much more for gasoline than much of this country? Yeah,
California, through regulations, means a lot higher taxes. They're basically an energy island because they cut themselves off from Texas and Louisiana. They import 20% of their fuels from Asia.
And it's Chevron's fault.
And it's Chevron's fault. I think a lot of people would actually say, especially the CEO of Chevron would say, actually, this is due to policies.
Yeah.
But you don't think the recent surge in gasoline is actually going to impact spending? We heard something different from Walmart yesterday. They're actually concerned.
Oh, it'll slow things down. I don't think that it's going to lead to an inflation spiral, which is a different thing. I view it as a tax on the consumer that will slow things down. And actually, if you look at market leadership, the way we think of things in terms of the direction of the global economy, coming into the year, it was an expansion. And that's when you want to be smaller, emerging markets, more value-oriented, equal weight parts of the market. And what you've seen in this little bit of a slowdown, I mean, we're hanging in, but a little bit of slowdown is larger cap, mega cap growth, higher quality back in. The interesting thing about the slowdown is that rates have gone up. Right. So my expectation would be that we will get a reprieve on rates as the economy moderates because of what we're spending on
What
gasoline.
happens in the middle of the summer, though, if we're north of $5 a gallon?
Yeah. Well, the risks rise. And so what's interesting from a market perspective, the risks to the economy rise. The question is, what does that mean for the markets? Because obviously that's ultimately what we're trying to get. And Fed policy is a little bit restrictive here. Not extreme, but a little bit restrictive given the shape of the yield curve. And the expectation would be if you run into these challenges, you'll start to get some of the policy easing. And I think, the administration will look for some type of way to get out, although, increasingly challenging.
There are things that matter to the economy and things that matter to the market, and sometimes they're not the same thing. If you're looking at the economy right now, going into the Memorial Day weekend, you mentioned the high gasoline prices, mortgage costs as well.
Yeah.
The 30-year fixed in this country jumping to 6.5%, the highest since August. That's a problem.
Yeah, the aspects of the economy that are hinged to where benchmark yields are paying a lot of attention, even if risk assets aren't. You have to wonder what it would take for the Fed to move back to an easing bias with rates with inflation where it's running currently.
Still got one.
Right, but I mean, that's true. I can't get over the idea that we still have an easing bias. But I'm just saying, if they move back to an easing bias after they ostensibly remove it in June, you have to think it's not in good news. Is that still good for risk assets?
Just to set the stage for Kevin Warsh, people are wondering whether he's going to be more dovish than is otherwise necessary. The existing Fed chair of this committee was running rates at 0 and doing QE with inflation heading towards 9%. And we're freaking out about the new guy being too dovish? Come on, guys.
Well,
are our memories that short?
Well, and I would add to that the idea that we still have an easing bias, even with inflation moving to close to 4%. Try to make sense of that.
Okay, so yes, the headline inflation, we know where it's going, right, because of what's happened with gasoline prices. The question is whether you're going to set policy based on a geopolitical event that led to a shock in these prices that are going to weigh probably on consumption. So it's why I focus on the break-evens. It's why I focus on the expectations, because when we got into trouble in 2022 was when the 5-year break-even was breaking above 3%. We're not there. The 2-year broke above it and seems to be dipping back down a bit. The 5-year's been sitting 260 kind of stable. So if you're a Fed chair, you can look at that and say, well, I have relative price stability. Let me look on the other side and see what that means for growth. So it's not Pollyanna to say that growth isn't going to be impacted. The question is whether it's strong enough for corporate earnings and whether that allows the Fed to lower interest rates, both which could be conducive for markets to continue in advance.
Brian, still bullish. I'm pleased we cleared that up. It's good to see you, sir.
Yeah.
Appreciate it, buddy. Thank you. Brian Levitt there, Invesco. Enjoy the long weekend, sir.
Thank you.
It's always good to see you. Thank you. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, good morning, John. Iran saying the latest U.S. proposal to end the war is narrowing the gaps, but agreement is still far off. Iran refuses to ship its enriched uranium stockpile to the U.S. President Donald Trump, meanwhile, says he opposes efforts by Iran and Oman to establish a toll system for Hormuz. SpaceX delaying a critical test of its Starship rocket just seconds before launch. The highly anticipated mission was expected a day after Elon Musk's company filed publicly for an IPO. The next launch window will open at 5:30 p.m. Eastern this afternoon. Standard Chartered CEO Bill Winter is apologizing for saying AI will affect, quote, lower value human capital. Winter's writing in a LinkedIn post, he recognizes that his, quote, choice of words caused upset to some colleagues. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the programme, struggling for control of Hormuz.
We have total control of the Strait of Hormuz. It's an international waterway. They're not charging tolls. We want it open. We want it free. We don't want tolls.
Up next, Colonel Wayne Sanders of Bloomberg Intelligence, live from New York City this morning. Good morning. Coming up a little bit later this morning, around 11 a.m. Eastern Time, at the White House, being sworn in. Kevin Warsh, incoming Fed chair. Look out for that. This guy's important, though, too. An hour before, Governor Waller, his view on monetary policy right now, given the pushback to the so-called easing bias in the statement over at the Federal Reserve. Where is Governor Waller on that effort?
Yeah, he has actually been shifting when it comes to his belief that inflationary pressures are reaching a crescendo that he needs to address. And so he's actually changed his rhetoric. So my question is he going to join the crew, sort of dissenting with the easing bias, and really set up June as a time where they remove it, where they then can put it back again later this year?
In like November time?
Yeah.
into December.
Exactly.
Year end and then cut rates.
Exactly.
Okay. Looking forward to the year ahead, according to Lisa Abramowicz. Equity futures right now on the S&P. You're not alone, I know.
That's what people think.
Firmer by 1/10% on the S&P. On the Nasdaq, up by about 0.07%. Call it 1/10% as well. In the bond market, Treasury yields shaping up as follows. 2 still close to 4%. 10 still around 460, backing away from that level, 455. In the driving seat, just seems to be crude at the moment, just whipsawing investors one way to the other. Brent crude 105 and WTI at about $98 a barrel. Under surveillance this morning, struggling for control of Hormuz.
Right now we're negotiating, and we'll see the Iran conflict. That'll end soon, very soon. We have total control of the Strait of Hormuz. It's an international waterway. They're not charging tolls. We want it open. We want it free. We don't want tolls.
Here's the latest this morning. The president saying the U.S. is firmly in control of the Strait of Hormuz as Iran and Oman discuss a permanent tolling system for the critical waterway. Bloomberg's Tyler Kendall joins us from Washington. Tyler, the president's totally in control but unable to open it. That's kind of the problem.
Right, exactly, John, because at this point, Iran is trying to tighten its grip over the strait. As you heard, President Trump did say that the U.S. isn't allowing any vessels through. We did hear from CENTCOM earlier this week confirming that so far 88 commercial tankers have been turned around amid the U.S.'s naval blockade. But then you have Iran's ambassador to France telling Bloomberg News that there are these active discussions here when it comes to formalizing a toll payment system with neighboring Oman. This is raising questions under international law, let alone concerns when it comes to the U.S.'s position. As we heard Secretary of State Marco Rubio say yesterday that if any such effort is implemented, that would mean that a U.S.-Iran peace deal would be, quote, unfeasible. It's also raising concerns among European allies. I had the chance to catch up with the EU ambassador to the U.S. yesterday, who told me that amid these threats when it comes to formalizing a toll, the European allies rather, are looking at a potential mission to help secure the waterway, but she couldn't really give me a firm timeline or what the tipping point would be for European allies to actually deploy those assets. The Strait of Hormuz really was just one point of contention that came to the forefront of the conversation yesterday, as Reuters reports that Iran's supreme leader said that the country's stockpile of highly enriched uranium isn't going anywhere. That, of course, has been a main sticking point for the U.S., as President Trump says that we could either see escalation or a diplomatic deal.
Tyler Kendall with the latest in Washington. Tyler, thank you. To build on that conversation, Colonel Wayne Sanders of Bloomberg Intelligence joins us now for more. Colonel, welcome to the programme. A central question of programming on Bloomberg Surveillance throughout the whole week. Is the status quo sustainable or not? Because the president is sticking with this blockade for now.
Yeah, I think the blockade right now is the only thing that the U.S. has from a lever that's actually causing some of the pain to Iran, because even the threats of strikes up until this point haven't done a whole lot. Iran has proven that when they're looking at trying to be able to protect their people, they really don't care at that point in time. They're willing to take additional losses. So the status quo ends up being one of the key pieces there. I think the War Powers Act and some of the things that you've seen across Congress right now isn't going to change President Trump's authorized use of military force if an escalation were to be required. But I don't think that's the first play in this, because as you've seen, Iran has still fought, they still fired some attacks at the Gulf states. They haven't fired at the U.S., but they have not seen any type of military response from the U.S. at this point.
Well, what would the United States be able to use the negotiating table besides the blockade in terms of maybe giving a concession to Iran to try to open up the strait?
Well, I think, if you look at maybe its escort agreements to be able to start it, as you guys mentioned, the U.S. is not going to condone coercion. So a lot of it right now, Iran's not playing by the rules, even when it comes to the Geneva Convention and comes to the way that militaries actually fight in a conventional sense. So why would we trust that any type of deal that would be made in terms of a tolling system would actually be held up? Anytime that Iran could potentially get upset about it, they would just change the rules and go back to their asymmetric threat of shoulder-fired weapons, Shahed drones, as well as Fatah 110 missiles, and say, okay, we're going to close that strait again.
But what does it say that Oman is willing to work with Iran on this? Obviously, the UAE and the Saudis are not signing up for an Iranian-led toll system.
Yeah, I think at this point in time, everybody's trying to find some type of answer to this, right? We've been in a stalemate now since April 8th, and we've had this ceasefire in place, and so I think some of the Gulf states may be actually Jordan's looking for some type of answer to be able to do that, because they may be willing to actually pay for that. and they could potentially mutually benefit. The problem is that the rest of the world isn't. They're not willing to take that chance and try and reopen based off of an Iranian regime that can change the rules at any time.
Colonel Sanders, when we speak to people in the market, they say everyone is incentivized to come to the table and they expect some sort of agreement, which is the reason why you aren't seeing some freak out in the oil market. When you talk to strategists, it seems like these two sides are miles apart and don't really have a reason to come together and to have a sustainable solution for the longer term. Can you square the difference here to sort of bridge that gap?
Well, I take probably the most constructive signal that we've seen in weeks, if not months, has been the fact that Iran used the phrase that U.S. is narrowing the gap. Up until now, you've heard President Trump talk about the fact that, hey, we're doing really well, the negotiations are going in the right direction, and then turns around and Iran, and through Iran's state-backed media or anything else like that, comes back and said, we've never said that. So the fact that you're actually seeing on the public stage Iran saying they're narrowing the gap is actually a very positive sign at this point in time.
Do we have a sense of what China's role could be in all of this? There were two tankers who got through the Strait of Hormuz earlier this week. There was a lot of fanfare about this. They were going to China. They were Iraqi oil. And people were excited because it was the greatest volume of oil to traverse through the Strait of Hormuz since the beginning of the conflict. Do we have a sense of whether China is pressuring Iran to end this or whether they are sort of lengthening the time that this could go on?
Yeah, I think China's trying to play somewhat in the middle ground a little bit here, but they are trying to pressure Iran in a certain amount to be able to open up more of the straits, specifically because, President Xi's looking for President Trump to start reevaluating, if you will, some of the arms deals that the U.S. has to be able to supply weapons to Taiwan. There's a $14 billion deal that's out there right now, specifically to be able to arm Taiwan. Taiwan literally just finished putting up a $24 billion supplemental that almost doubles their defense spending, specifically so that they could actually purchase more munitions as well as air defense systems from the U.S. And so I think China's trying to play part of that balance right there to say, okay, look, hey, Iran, you need to start playing a little nicer right now because I really need President Trump to lay off some of the weapons deliveries to Taiwan.
Does it even matter if the president signs on to that $14 billion package, though? Where are we in terms of actually shipping these weapons to Taiwan? Aren't we years behind?
In some are, yes. But Taiwan has had multiple deals with the U.S. up until this point, so the deliveries have continued. So I don't know whether or not it would be a slowing down of deliveries to Taiwan, similar to, some of the PAC-3 interceptors going to and Patriot systems going to Switzerland have actually stopped a little bit. They've actually been delayed delivery to Switzerland so that the U.S. can have them for the U.S. operational needs. So that may actually be. You're absolutely right. The industry as a whole right now has already started moving the needle. This has started back even last year when Secretary Hegseth had put out his acquisition reform on November 7th. So you're starting to see some of these larger long-term deals that have caused, Lockheed and RTX and a lot of their munitions programs to double down and actually start providing infrastructure investments into their own lines so that they can double, triple, and even quadruple their production rates.
Colonel, always good to see you, sir. Thanks for dropping by and catching up with us. Colonel Wayne Sanders there of Bloomberg Intelligence. I understand we've thrown a lot of this situation and the cushion is not as big as it was, but relative to what was expected, it's impressive how inconsequential this story has actually been so far, and I stress so far, but so far not consequential at all in the grand scheme of things.
Part of this is because of how much oil was floating on the water at the time of the conflict, the onset. So it took a couple of weeks to work through that. And the other aspect has been U.S. production, which is just absolutely ramped up. And the exports have been through the roof. Can we continue that? And I think that that's why I listen to some of the Barclays guys who are getting less constructive.
Yeah, you tell people that June matters. That's when it bites. And people are like, I heard that about April and May. And now it's June. But June kind of matters.
Well, it does kind of matter when it comes to the inventory drawdown. It might also, though, matter in terms of where you live, how hard you're going to feel the brunt of it.
Coming up on the programme, we'll catch up with Pierre Ferragu of New Street Research as the AI race to go public heats up. Plus, Yahira has your morning movers. Estee Lauder ending merger talks. That stock is up by 10%. Two days of gains on the S&P 500, adding to an eighth consecutive weekly gain. That's what we're on course for going into the weekend. Equity futures this morning positive by 0.1% on the S&P. On the Nasdaq, just about unchanged this morning. In the bond market, hello Kevin Warsh and welcome to the Federal Reserve. Yields very close to multi-decade highs at the long end of the curve. 30s at around 5.1%, 10s around 460. Energy crisis, a divided committee. Inflation at multi-year highs. Energy prices at multi-year highs. The to-do list is building and building.
And you could make Brian Levitt's argument that, yes, this is largely due to a supply shock in the oil market, which they can look through. But people will say, take a look at the AI build-out and what's happening, the inflationary pressure from that. Take a look at the resilience in consumer spending despite these higher oil prices and commodity prices. And then you start to have a more complicated picture, which is the reason why they almost want to drop their easing bias. So, it's sort of an interesting moment where we already have something, as you've pointed out, of a dovish Fed. How is he going to come in and make them dove them up, given the fact that they're already coming from a pretty
I don't know if he wants to. We don't know if he wants to.
Yeah.
Do we? And that's part of the mystery around this particular candidate, because usually they're a known entity on the current board. Think Yelena, already on the board, becomes Fed chair. You think Powell, already on the board, becomes Fed chair. We've got experience with Kevin Warsh from a decade plus ago. We don't know what he stands for now, and that's the mystery around this particular Fed chair.
Adding to that mystery, we know who he was in 2009 and 2010 and 2011. And it was this very hawkish Kevin Warsh. He said that inflation was a choice. People said, oh, you're choosing the index that's lower. At the same time, maybe he actually means that he is still the same Kevin Warsh from a couple of decades ago.
Let's turn to the energy story. It's part of the problem for the incoming Fed chair. Brent crude and WTI a little bit higher this morning. $4-5 range in the last 24 hours on Brent. 105 this morning and up by about 3%. As we count you down to the open, about 3 hours away from the cash open with some single names, some morning movers. Yahara has more. Hey, Yahara.
Good morning, John. We start with Estee Lauder. Shares are surging nearly 10% in the pre-market after the beauty giant walked away from its proposed deal with the fragrance giant Puig, a deal that investors were worried was coming at the wrong time since this company is in the middle of a turnaround due to falling sales. So investors appearing relieved that now management can focus on the core business. Meanwhile, worries about AI disrupting traditional software companies are easing a bit today after this company. We turn to AMD. Shares are rising 1.4% after some bullish comments from Lisa Su overnight in Taiwan on CPU demand, saying that it's exploded due to inferencing demand. And for that reason, Su says that AMD sees the market growing more than 35% annually for the next 5 years. And now we end on workday. Those shares are surging more than 10%. Earlier, I saw more than 10% in the pre-market after it delivered better than expected results and a solid outlook. John?
Yahara, thank you. Thanks for the update. Appreciate it. Workday up by about 9% this morning. On our radar this morning, the US and Iran at odds are the key sticking points to end the war. Tehran demanding it keep its enriched uranium and create a toll for the Strait of Hormuz.
I don't know of anyone in the world that should be in favor of a tolling system in an international waterway. That's just not acceptable. It can't happen. If that were to happen in the Straits of Hormuz, it will happen in 5 other places around the world.
Trump warning earlier this week he'll resume attacks if Iran does not agree to his terms. Elsewhere, OpenAI expected to confidentially file for an IPO as soon as today. The information reporting the company generated nearly $6 billion in revenue in the first quarter, boosted by its coding agent and ads on ChatGPT. And finally, the drama continues. Standard Chartered CEO Bill Winters apologising for controversial comments on AI. Winters posting on LinkedIn he's sorry for his choice of words, referring to workers as, quote, lower value human capital. The bank planning to cut about 8,000 roles over 4 years.
So this crisis for him continues. And on one hand, you could say, why did he say that? This just created a PR disaster for him. On the other hand, you can say that is this a messaging problem or is this a reality problem? How do politicians, how do big executives respond to the existential fear throughout the population that they will be replaced by some of these technological advancements, especially given we don't know what the ultimate aim is? We hear about AGI, we hear about how they're so much more intelligent than us, that they can do things that they don't need to eat and sleep and breathe. So at a certain point, it isn't just a messaging issue. This is an issue of giving a vision over which jobs are being created and how people are going to be retrained to assuage this? I mean, yes, he did this inartfully, but it speaks to a bigger question that needs to be addressed.
Very inartfully, not elegantly, because first he said when his original apology was that it was taken out of context, now he doubled down and said, okay, I do realize maybe this wasn't the right words, way to express myself, and I've heard a lot of people in the company. But you also have to ask, how many companies were already going to lay off individuals because of cyclical patterns and needs to potentially trim down, and they're just blaming AI as the reason for doing it?
I welcome this story, and I'll tell you why. This was insight, direct insight into how this is actually talked about in the C-suite. Those words aren't by accident. This is how they talk about it internally. That's Park Standard Chartered. I think that applies to a whole host of companies right now. You just found out how they talk about this technology inside a company when they're thinking about laying off 8,000 people. It's a rather big tout to me. And why are they talking about it like that? Because they think it's going to help the stock price. That's why they're talking about it like that. Now, they might dress it up with different language in the weeks and months to come, but I think we just found out where a lot of people stand on this big issue. Now, they might come out publicly in interviews and say, no, we want to grow the pie. Things will get better. We'll do more. And overall, we'll see more programmers join the company, and we'll increase things there and increase there, even if you see layoffs over here. But that's how the industry right now on Wall Street is thinking about this technology.
They're being incentivized to think that way because they are throwing so much cash at some of this technology. They have to justify what they're getting for it. If they're not getting efficiencies, why are they spending billions of dollars to invest in it at this point? And if they don't give a sense of how they're adopting it, the market penalizes them for that too. Remember when a shoe company became an AI company? I mean, or Ford all of a sudden is an AI company. I mean, think about, who's an AI company? Suddenly their stock is a huge pop. If you don't give some sort of strategy, you get penalized. So they're being incentivized to think about it that way, and then incentivized to talk about it very differently. The reality is the world is changing. The question is how quickly, whether this is going to be wasted money, whether people are going to get lost behind. These are the big issues people need to be talking about.
How quickly will policymakers move in response? Let's turn to the other big tech story of the moment. 3 AI giants racing to go public. SpaceX, OpenAI and Anthropic fighting to secure market dominance and compute capacity. Pierre Ferragu of New Street Research writing, owning and controlling the physical infrastructure can eventually turn into a fundamental market share advantage. Compute owners are likely to become the kingmakers of AI. Pierre joins us now for more. Pierre, good morning, sir. It's good to see you.
Good to see
We'll
you.
avoid the banking story. Let's focus on SpaceX and them coming public. We used to talk about Jack Dorsey struggling to run 2 public companies. At the time, it was Twitter and it was Block, then Square. Elon Musk, SpaceX, Tesla. Is the future 1 or 2?
I hope 2 for his personal lifestyle and work-life balance.
You hope 2?
Yeah, I mean, that's like a merger that would make a lot of sense, getting like self-driving cars and robots together with orbital data centers is actually something that would make a lot of sense. And Tesla probably at some point will need a lot more compute and orbital compute.
At some point, how close are we to a potential merger between those 2 companies?
I would say there is no emergency. It's really, it's going to be a question of when the market is ready for it more than anything else. And for now, you have actually quite a good combination at SpaceX. You have like AI deployments that is going to consume billions of dollars of cash flow. And actually the telecom part of SpaceX, Starlink, that already is generating a lot of free cash flow.
This is part of the anxiety for a lot of people who are seeing all these IPOs come to market. Is SpaceX a space company or is it a satellite company? And is Tesla a car company or is it a robotics company? I mean, it's sort of a question of who's funding what and what the goal is for some of these companies. How do you understand SpaceX's ambitions versus what's actually paying the bills?
Well, let's talk ambitions. SpaceX with like Starship is going to start deploying V3 satellites for the telecom business at the end of this year. When these deployments get to scale, we're talking like 50 flights a year to deploy a constellation of 20,000 satellites. In the S1, SpaceX actually ambitioned to deploy 100 gigawatts of data center on orbits in the, let's say, in the near future. 100 data center in orbits, it's 20 launches, 20 Starship launches a day. So financing these deployments is actually going to require a lot of money, and that's what space is going to be. The space activity of SpaceX today is going to become very, very small compared to the orbital data center business.
How far away is that, given the fact that Starship had a problem in launching yesterday, and that was the first one since October? And there have been a lot of questions around how much has gotten launched. I think only 10 launches have happened of this particular Starship. Correct me if I'm wrong. So how do we get to 20 a day?
So hopefully we have time for that. The good thing is that SpaceX is actually the player that has like the best time constant in the industry. When you get like a rocket ready, what matters is not the number of weeks you have or the number of months. It's actually the number of launches. And SpaceX is very good at bringing together a new launch very, very rapidly. And remember that Falcon 9 is flying like more than 3 times a week already. So a setback like yesterday is actually just a few weeks or a few months on the timeline. But actually, Starship is making a lot of progress and is getting ready, definitely.
Who is his biggest competitor? I guess it depends what you're talking about, whether or not it's the rockets or Tesla with the cars or XAI and Grok. Is it OpenAI? Who is Elon Musk's biggest competitor?
So at the end of the day, the key to this business model is to get everything together. Vertical integration is really what makes you win. You can't be in compute without being in space if compute is going to space. So the largest competitors of Elon Musk or of SpaceX are going to be first and foremost compute players, which means Google, Amazon, Meta, Microsoft. The ones who are going down the integration route the fastest at the moment, who are like the closest to SpaceX, are actually Amazon and Blue Origin, who work together very tightly to get to space, to get telecom first and then compute later. I would expect at some point an additional conglomerate, an additional vertically integrated player around Google, or maybe like a combination of multiple like compute players to get into that world as well. I think compute and space are meant to get vertically integrated going forward.
Yeah, how do we make space for this stock? Forgive the pun. How do we make space for SpaceX when it goes public? What am I selling? What am I lightening up on to get this in?
Well, ask people around. Like, I've never seen
what are they
so much enthusiasm for that story. It's a dream. It's like the space conquest, and like the level of interest for the stock is absolutely fascinating.
Where is the interest falling away? Nvidia doesn't feel like that magical story it used to be. When did that all go quiet?
I mean, if SpaceX is IPOing in the next few weeks, and then after that you have OpenAI and Anthropic, I think it's going to keep us busy over the summer at the very least, right?
Yeah, it's good to see you. Thank you, sir. Pierre Ferragu there of New Street Research. It has gone a bit quiet with Nvidia, hasn't it? People starting to look at opportunities and big moves, big explosive moves elsewhere.
They want to see the exponential growth. And even though Nvidia is still growing at a very fast clip, it's sort of impossible for it to keep growing exponentially when it's a $6 trillion company. I asked somebody this question yesterday, and they said actually they think it's probably going to be in the non-tech stocks because people have such faith in AI right now that they're going to sell the equal weight, right? They're going to sell the discretionary. They're going to sell some of the staples. And that, to me, is a fascinating read on how AI just seems to be accelerating away from the rest of the economy.
Nasdaq futures this morning just about unchanged. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. The U.S. is taking measures to prevent the spread of Ebola, directing flights with American passengers who have recently visited affected countries to Washington Dulles International Airport for enhanced screening. President Donald Trump saying he plans to send 5,000 troops to Poland, reversing a previous plan to suspend army deployment. Trump has suggested a drawdown of the U.S.'s 85,000 military personnel in Europe is in the works. And the opening of a new U.S. consulate in Greenland sparking protests. Residents voicing concerns about President Trump's plans for the island. Hundreds of protesters gathering outside the new consulate chanting, USA, go home. That's your Bloomberg brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, Kevin Warsh at the helm.
What is really, really going to be important for Kevin Warsh is keeping inflation expectations in check. It's very, very important for the Fed to change its bias from easing to neutral.
Up next, Krishna Guha of Evercore, live from New York City. You're watching Bloomberg TV. Stocks are positive, up by 1/10 of 1%, going into the long weekend stateside, advancing just a little bit more. On the Nasdaq, just about unchanged. In the bond market, 2s, 10s and 30s. Your 10-year yield, 4.55, backing away in the last few sessions, again this morning, by a single basis point. Under surveillance this morning, Kevin Warsh at the helm.
What is really, really going to be important for Kevin Warsh is keeping inflation expectations in check. When inflation expectations start to get a bit unhinged, then he has a problem in his hands. So I think, you know, it's very, very important for the Fed to change its bias from easing to neutral and be ready to act if needed.
So here's the latest this morning. President Donald Trump swearing in Kevin Warsh as the new leader of the Federal Reserve later on this morning. The incoming Fed chair facing a divided committee and a market beginning to price in rate hikes. Krishna Guha of Evercore writing the voting members are more dovish than the wider group of participants. This will keep Warsh, help keep Warsh, keep the track, keep the Fed on track. Krishna joins us now for more. Krishna, welcome to the programme, sir. Let's build on some of that. A lot of people are saying it's going to be complicated, difficult for him to navigate this very fractured committee. Are you suggesting it might be just a little bit more straightforward?
Oh, it's certainly a difficult setup, for sure. But I think it's important to understand that there's every signal that the centre of the old committee is reaching out and hopes to meet new chair Warsh halfway. That was the significance of the 9 of the 12 voting members keeping in that easing guidance at the last meeting so that Warsh gets to decide with them what to do with it at the June meeting.
You think it was orchestrated for the incoming Fed chair, deliberately orchestrated, Krishna?
I think it would have been very provocative to change the guidance 5 minutes before the new chair arrives. And I think it's the fact that they chose to defer the decision to June is part of, I think, a larger pattern by which you should think monetary policy this year will essentially be a structured negotiation between the old chair, the old committee and the new chair, not some kind of trench warfare between them.
So this orchestrated discussion or negotiation between the old committee and the new Fed chair, what is the new Fed chair arguing for, given the fact that the market seems to be moving away from the Fed right now?
Well, I certainly think that the economic circumstances are very different from the ones that Warsh thought he would be stepping into, right? He thought he would be stepping into a mid-2026 world where tariff inflation was starting to roll over, underlying inflation was starting to move down, and he could fairly quickly move the argument to rate cuts. That's clearly not the world we're in now, with the oil shock from the war. And by the way, the ongoing, still not quite resolved impasse between US and Iran, that certainly means that he can't make any kind of near-term push for cuts. I think what he's going to try to do is hold the line with an extended hold, try not to hike this year unless he's forced to do so, and then hope that the opportunity will open up again for rate cuts, possibly at the very end of this year, perhaps more likely now in 2027.
There's a delta opening up between the bond market and the stock market. When you take a look at the bond market, they're pricing in a rate hike early next year. They've priced out the easing bias a long time ago. If you take a look at risk markets, Brian Levitt said it perfectly. They're expecting that he'll come in, he won't hike, he might sound hawkish so that he can remain dovish, essentially, get that easing bias back in and then cut rates by the end of the year. Who's right?
Well, it's probably not 1-0, right? But I do have personally a bias a little bit more to the way the equity market is reading this. I think that the Fed will not hike rates this year, and I don't think the Fed will likely hike rates next year either. I still think the single most likely outcome is that the inflation waves ultimately wash through, underlying inflation tracks back down towards target in 27, and the next move is a cut, not a hike. So I do agree with that basic diagnosis from the equity market, but I certainly wouldn't be as relaxed as some people are. The modal case, the base case for inflation and rates is lower and lower eventually, but all the risks are to the upside, and I think that's what the rates market is telling us.
Krishna, conventional thinking was that the president really did want an interest rate cut ahead of the midterm elections. Potentially he's giving Kevin Warsh some breathing room and understands that he can't do much right now given what is going on with the Iran war. When do you think this first cut could happen, the earliest?
Well, you're certainly right that I think Kevin Warsh is going to get a pass on June and July. The question is whether Donald Trump can remain patient and continue to give his pick, his man, the flexibility from sort of September onwards. I think there is some risk that Trump starts to dial up the pressure, let's say from September onwards, with a view to trying to get some easing before the midterm elections. But I think if you look at the math around inflation, the need to confirm that the tariff stuff's rolling off, that the oil market is stabilizing, oil's coming down, the pass-through from oil is moderate, not more than that, that AI cost spillovers are having some moderate effect, but not a broader effect on prices, that underlying disinflation is coming through. I do believe it's possible all that could come through in time for December, but you have to run the table. Everything's got to go right in order to get a window to cut at the end of this year.
Of course, he's taking Steve Myron's seat. Do you have any sense on when Jay Powell's actually going to leave?
So I think that's a very interesting question. I had anticipated that he would stay on, but indicate that he would leave as soon as the specific loose ends associated with the investigation into his conduct in the building project, cost overruns, were firmly tied up, locked down, whatever your preferred metaphor is. But the way he presented it in the press conference, his last as Fed chair, was a bit broader than that. He seemed to be indicating that he would stay until he was confident that the wider set of legal attacks on Fed independence had been shut down and were not going to come back. And I think that relates to at least rumor or chatter that there is still probes or people in the administration looking to see if they can find an angle on some of the existing Fed members beyond just Powell and Cook, the two who've been in the public crosshairs. And my sense is that Jay is saying, look, this all has to stop before I can step away. So, if that's the case, he could be gone within a few months. If not, he could be around into early next year.
Krishna, it's good to see you, sir. Appreciate your time. Krishna Guha there of Evercore. Going after central bank independence is not a good idea. We can all agree on that. Widely stated, widely agreed on all of that. Consequences are something we've focused on. I haven't seen real signs that it's damaged the operational autonomy of the Federal Reserve right now, at least in the price of financial markets. That's the good news. Where it could damage the Federal Reserve is their ability to manage optics at a time when the incoming Fed chair wants to make reforms to how they communicate. So let's go with inflation, for instance. If you say inflation's a choice and you want to change the preferred measure for inflation, people will look at that and they'll make the accusation that you're doing that so you can choose an index that offers you the opportunity to cut interest rates. Enter Governor Powell. This is where I think Governor Powell can be a little bit more helpful for Chair Warsh. If Chair Warsh wants to make changes, reasonable changes, and he wants to manage the optics at the same time, getting the sign-up from Governor Powell would be a decent way of doing that, because there are changes that need to be made, reforms that need to be made at this institution. And if you can get the support from someone who's been there and everyone knows he's not just doing it to please the president, then I think that's a decent way of moving forward.
That's the reason why some people are saying, actually, it could be helpful to the new Fed chair, Warsh. At the same time, if they disagree or if there's any dissent,
then we've got a problem.
Then we have a different story here, completely altogether. It does, though, hinder how quickly Kevin Warsh can move with some of the changes that he wants to make, given the fact that people want to see a status quo, given the uncertainty right now in the economy.
He's super well qualified. You've seen how many establishment figures have backed him up. But yeah, it complicates life. It certainly complicates life for the incoming Fed chair, Kevin Warsh. Coming up next on the programme, we'll catch up with Tiffany McGhee of Pivotal Advisors, Bob McNally of Rapidan Energy, the NYSE president, Lynn Martin, and Debbie Cunningham of Federated. The second hour of Bloomberg Surveillance. Up next.
Markets are still viewing the driver of higher rates here as being temporary.
We are starting to see some of that bond math kicking in.
The fundamental data in the U.S. is relatively strong.
It's possible the Fed could actually be hiking rates.
I think we're higher for longer, and that's here, it's across the globe.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now with stocks within 1% of all-time highs on the S&P 500 and heading towards an 8th consecutive weekly gain. On the Nasdaq this morning, firm up by about 1/10%. In the bond market, 2s, 10s, 30s look like this. Yields just about unchanged, down a single basis point on 10s, 455. Heading into this later on this morning, 4 hours away, Kevin Warsh swearing in as the Fed chair down in Washington, D.C. Over to you. Aren't you excited, Kevin Warsh, to come into this Federal Reserve, take the helm at a time of surging inflation in certain metrics, and a bond market that's getting, according to President Trump last year, yippee, given where 10-year Treasury yields have gone and given how much yields have gone up. How much can he really give that dovish flavor that the president is looking for? We've already established he kind of can't for a little bit. Will he maintain it, though, in the back of his mind? And how is the market adjusting? Because right now, risk markets are saying, yeah, you can talk hawkish, but we know your story. And the bond market's saying, actually, we kind of think that maybe you're going to have to actually execute some sort of rate hike. What does he have control over right now? He can't open the Strait of Hormuz. The president can't open the Strait of Hormuz at the moment. They're still trying to negotiate that. It's not just the US bond market. It's the Japanese bond market, the UK bond market, the German bond market. It's the global fixed income market right now, testing just about everybody. Some of the aspects that people are looking for, yes, on one hand, you could say it's the oil price shock, but it's also the commodity price shock that's stemming from the AI outgrowth, et cetera. Not to mention the fact that you've seen resilient consumer spending. You could argue that we're at neutral just based on the fact that the economy has continued to move along at a pretty hefty pace. How he messages AI spending, how inflationary versus disinflationary it is, what that sequencing looks like, and given what kind of pain he sees or doesn't see in the underlying economy, will color how people will understand his particular reaction function.
Because all the issues right now that are taking place, the president does seem to give him a little bit of breathing room. He said to a Fortune magazine, you can't really look at the figures until the war is over. He told the Washington Examiner, I'm going to let him do what he wants to do. He's a talented guy. He's going to be fine. He's going to do a good job. But what happens before the midterm elections if this Federal Reserve is still on hold? Conventional thinking was that this president really wanted an interest rate cut before November.
Should we talk about the circus in the commodity market? Let's talk about it. Brent right now 105, up by 2.7%. WTI 98, up 2 percentage points. The last 24 hours has been absolutely ridiculous with regards to reports. Reporting, by the way, on negotiating teams from both sides, from the US side and on the Iran side. Yeah, we seem to have removed some roadblocks. We seem to be getting closer. It looks great. We just want to keep our uranium and keep its hold on the Strait of Hormuz. So then this is absolutely unacceptable to us, but we're getting closer. And the market's sort of, like this, trying to figure out who they should look at next.
Are they getting closer? We have been here with the Iranians, not just last year, for decades. They drag their feet. Maybe they're getting closer because maybe there's more conversations happening, but the red lines for the regime in this White House have not changed. And until someone is able to give a meaningful concession, we're not going to get some sort of agreement. But to your point, there's 2 negotiations going on right now. There's the Strait of Hormuz opening, and then there's nuclear. And it's the terms to negotiate the opening. Each side's trying to carve out negotiation, and they're doing that through various media reports, telling everybody what they think about the current situation. The president, at the same time, is trying to manage financial markets. And you have to say has done a decent job of that because things could have got really out of control. That's where we are. That's why things are so confusing. The reason why this is a difficult story is because it's like an asteroid coming toward Earth. And people are like, should we shoot it out of the sky? But it might miss, but I'm not sure. And how much time do we actually have? And then at the same time, you sort of have this vague sense that the asteroid's still coming closer. So it kind of is the discussion between markets that are saying, yeah, but it'll get blown up because it's not feasible for it actually to get here. And the asteroid strategist saying, not great. Breakfast news with Bramo. Well, come on. Asteroids, all right. Coming up on the program, Tiffany McGhee of Pivotal Advisors with stocks inching towards an 8th consecutive weekly gain. The Nyse president, Lynn Martin, as Wall Street awaits his largest IPO in history, and Deborah Cunningham of Federated looking ahead to the swearing-in of Fed Chair Kevin Warsh. We begin this hour with stocks steady following back-to-back gains. Tiffany McGhee of Pivotal Advisors writing, focus on quality, strong balance sheets, pricing power, and durable earnings. Tiffany joins us now for more. Tiffany, welcome to the program. We focus so much on tech and tech stocks and the outperformance of chips up until recently. This week, small caps, the equal weight. Just a quiet rally picking up there, Tiffany. What's going on?
Listen, there's a lot going on. Good morning. Thanks for having me. So listen, first of all, I think that the markets are trying to really price in multiple things at once, right? So AI-led earnings power, Fed patience. We've got geopolitical energy risk. That's a lot to digest before coffee. And then you throw in some election year noise and a new Fed chair for good measure. And these things aren't really going away anytime soon. And so that idea, that saying that we always say kind of sell in May and go away, may be tempting. But after a strong rally, market timing really requires two hard calls: when to get out, and when to get back in, right? And so the bigger story, I think, right, and to your point, you mentioned small caps, is really how well diversified investors that are thinking a little longer term have been rewarded for staying invested, right? And so just by the numbers, right? If we look at 1-year cumulative returns, let's look at small caps through last week, up 35%, right? Emerging markets up 45%, growth up 25%, value up 25%. You want to talk fixed income, high yield, up 7%. But wait, there's more. When you look at the 3-year cumulative numbers, right? So not just a little bit further out, small caps up over 65%, emerging markets up 86%, growth up 103%, value up 63%, high yield up 20%. Listen, the numbers tell the story. You stay diversified, you stay disciplined, and you get rewarded.
Tiffany, what's the biggest risk right now? Is some sort of decline in the high-flying stocks or some sort of resurgence in inflation?
Yeah, I think it's both, right? Again, we have these multiple things that are kind of swarming around, and our view is that, listen, like fundamentals really kind of remain solid, and the Fed, you were talking about the Fed a little bit earlier, I think it's likely to remain on hold, right? And we have all of these things swarming, and so how do you prepare for that, right? And really, you think less about the short term and more about the longer term, right? And so, I just kind of laid out the power of strategic asset allocation, right? Don't need to predict every headline correctly to participate in long-term wealth creation. You just need a really thoughtful allocation and diversification process.
How much do you actually get pushback from a lot of clients who are getting concerned about how heady things are? I mean, how much do you find yourself counseling people on this repeatedly because they want to just pile into cash? They're not feeling great, even though markets are hitting new highs.
Yeah, I mean, so all of our clients are institutions, but they've got very varying levels of investment knowledge. And so I think we do a lot in the beginning to really set the expectation, right? So, having a plan, setting a strategic asset allocation is very, very important. And so we do kind of preach that gospel of diversification. But yeah, certainly through March, around March, clients were, really kind of looking at the volatility and getting nervous. But, I think at the end of the day, that you need to have the discipline to not let the scary headlines become an investment policy, right? And so that's exactly where asset allocation comes in.
Tiffany,
but yeah, I mean, go ahead.
How are you feeling about the IPO market coming up? Or do you want to get involved in some of these companies that we're going to see? Massive companies coming, SpaceX, Anthropic, OpenAI.
Yeah, so I think each of those have a very interesting story. When you talk about SpaceX, we don't think it's really going to be it's going to be just like a regular IPO, right? So it'd be, more of like a test of whether public markets are, willing to pay private market prices. And so really for like a company, it's part rocket business, part broadband company, part defense contractor, and maybe part AI infrastructure platform, right? And so all of that with Elon Musk kind of governing risk attached, right? And so I think investors, when they think about that, are kind of focused on how much control Elon Musk retains, whether public shareholders will have kind of like meaningful influence. And so, I think SpaceX is getting a lot of attention, and it might be the IPO that everybody wants, but I think that governance structure may really remind us that access is kind of like not the same thing as control. So I think that's a little bit of an interesting move.
Interesting. Tiffany, appreciate your take. Thank you. Tiffany McGhee there of Pivotal Advisors on the SpaceX IPO. Happening a little bit later this morning at 7:30 Eastern Time, catching up with the Nyse president, Lynn Martin, on the race to secure some of these IPOs. Nothing regular about any of this. We're going to see some of the biggest IPOs we've ever seen, not just SpaceX, but OpenAI, Anthropic. These aren't what IPOs used to look like. Fairly young, youthful companies coming to market where the best growth might be in front of them. Some of these companies are super mature and have been around for years.
Yeah, and what's notable is how some of the indexes are adjusting to this. The NASDAQ changed their rules to allow some of these shares to get into the broader benchmarks within 15 days. That previously was a couple of months. So it gives you a sense of how quickly this will get fed into public portfolios, given the past history and how this really was a lot slower.
We'll spend some time on that a little bit later this morning. Nasdaq futures up by 1/10% with an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The White House and Pentagon clashing over rare earths. The Pentagon debating whether to scrap an $80 million conditional loan to rare earths refiner ReElement Technologies over doubts about its ability to scale as technology and long-term revenue forecasts. Smart ring maker Oura Health filing confidentially for an IPO, seeking to capitalize on growing demand for wearable devices. Sources telling us here at Bloomberg the company is working with banks including Goldman Sachs, Morgan Stanley and JP Morgan. In sports, the Knicks winning their 9th straight playoff game, beating the Cleveland Cavaliers 109-93 in Game 2 of the East Finals. Josh Hart scored a playoff career-high 26 points. Game 3 tips off Saturday night in Cleveland. And that is your Bloomberg brief. John.
Vonnie, thank you. They just don't lose anymore.
No.
What's the streak running at now?
9 straight
Nine
playoff
straight.
wins for the Knicks. 2 more wins and we're in the finals. 6 more wins, we have a championship.
Okay, amazing. Up next on the program, controlling the Strait of Hormuz.
We have total control of the Strait of Hormuz, the Iran conflict. That'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before.
Up next, we'll catch up with the Rapidan Energy President, Bob McNally, live from New York City this morning. Good morning. Check it out, into the long weekend. Another read on consumer sentiment. Rock bottom. It's unreal, this is. Multi-decades. This survey goes back to what, the late 70s? And we've got sentiment at rock bottom. Worse than it was in the GFC, worse than it was in the pandemic. And I get it, people are worried about the future. AI is a part of that. You've got gasoline prices at multi-year highs. Mortgage costs are too high. There's a lot of complaints out there right now, and it shows up in this sentiment survey.
Does it show up in the economy? And some people are saying that on the margins, you're starting to see a little erosion of the buying desires, given the fact that prices have gotten higher and people don't feel good. The long-term purchases, that's what we're hearing about. The idea that people aren't buying homes, that they're not buying furniture, that those kinds of investments maybe are going away while still exploring the Instagram moments while taking planes to various places.
Consumers aren't happy with this economy for a bunch of reasons. Strategists on Wall Street love this market. Futures up by 1/10%, within 1% of all-time highs. We've had 7 upgrades since the war started, 7 price target increases since the war started. The latest from CIBC and Chris Harvey at 80.20 versus 74.50 previously. That's quite an upgrade to your price target into year end.
It's the earnings. It keeps being the earnings. Lori Calvasino trying to make the math work for a doomsday scenario, because that's what she's getting asked by clients who are getting concerned about how far this rally is going. And she's saying we have to throw so much at this market for it to go down in any sort of significant way. It really has been about earnings that have outstripped the price increase, the PE ratios, right? So this is the issue, that people are looking at stocks and saying, arguably they're cheaper than they were 6 months ago because of how quickly the E in the PE multiple has expanded.
In percentage terms, you expect recoveries to be really sharp coming out of recoveries, out of downturns. So economic depressions like GFC or the pandemic, and then you expect this, just a sharp recovery in earnings. Outside of those periods, we have not seen earnings like this in decades. You take out GFC and the pandemic, haven't seen earnings growth like this in decades. It's been that good.
It's been driven by AI. It's been driven by the fact that everyone needs to buy their chips so that they can be on the hyperscaler surge to fame. But at the same time, you're seeing it in other companies as well. Is this because some of the bigger companies are getting more efficient? Is it because of AI? Is it because they're just cutting people who they didn't like since the pandemic, who they now have the capacity to fight? I mean, really, this is sort of what people are talking about as they look at some of the earnings that keep beating expectations.
Let's turn to energy. This is the problem for a lot of you. The headlines around this story is the problem for all of you. Brent Crude and WTI look like this. Brent Crude at 105. WTI this morning at 98, higher on both of those contracts this morning by more than 2%. Under surveillance this morning, controlling the Strait of Hormuz.
We have total control of the Strait of Hormuz. It's an international waterway. They're not charging tolls. We want it open. We want it free. We don't want tolls. The Iran conflict, that'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before.
It's the latest this morning. The president asserting U.S. control of the Strait of Hormuz. Iran and Oman discussing a tolling system for the critical waterway. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John, good morning. Well, Iran's ambassador to France did tell Bloomberg News yesterday that there are these active discussions underway with Oman to formalize a potential toll payment system. And while President Trump has maintained that no ships are getting through the strait without U.S. approval, and CENTCOM did say earlier this week that so far 88 commercial vessels have been turned around, new this morning, Iranian state media is reporting that the IRGC claims that 35 ships have been able to pass through the strait in the last day after seeking permission. A potential toll payment system is, of course, raising some serious questions under international law, let alone, of course, concerns when it comes to the U.S.'s negotiating position. As Secretary of State Marco Rubio maintains that if any system is implemented, that would make a peace deal ultimately unfeasible. Iran's bid to formalize control over the strait isn't going to make regional allies too happy either. There was this one analysis cited by the Wall Street Journal that estimates that Gulf states would pay between 80 to 95% of the total cost of tolls if they were implemented. The Strait of Hormuz was only one of the points of contention that really rose to the top of the conversation yesterday after Reuters reported that Iran's supreme leader maintains that the country's stockpile of highly enriched uranium isn't going anywhere. Yet, John, even as we get what appears to be pushback and a lack of progress towards a deal, we also got some signs of optimism. Iranian state media saying yesterday that some of the gaps have been bridged. Secretary of State Marco Rubio this morning telling reporters that some progress has been made. It feels like perhaps there could be some movement around this phase deal to get the Strait of Hormuz opened as quickly as possible and kick the can down the road on negotiations on curbs on Iran's nuclear program. But at this point, no formal confirmation from either of the sides.
Tyler, everyone's exhausted. I'm sure you are too. We appreciate the update. Tyler Kendall over in Washington, D.C. To build on this, Bob McNally of Rapidan Energy writing, going forward, key shock absorbers will wear off. The window for avoiding a 2008-style train wreck narrows with every week Hormuz stays shut. Bob joins us now for more. Bob, welcome to the programme. That's quite a statement. The options in front of the president: maintain the blockade, certainly getting more difficult as the weeks go by, resume the hostilities or walk away. Where do you think we're going here?
Hey, John, you know, the market is skated by on optimism that this Hormuz closure will abruptly and quickly end, and by using those shock absorbers, SPR, oil on the water, inventory declines, et cetera, Asian refiners dropping runs. We're just saying, as we model, like if we go through all of July without Hormuz, so another 450 million barrels gone, we think at that point, you know, no one knows where tank bottoms are. It's never been observed, but it's a real concept. And as we get down to 2.2 billion barrels in OECD inventories, we think oil prices are going to do, John, what they have done many times since World War II: end the party, catalyze an economic downturn. And so the president, I think, though, you know, the White House seems to be optimistic that they're winning. So does Iran. Both sides are playing for time. And so that optimism that Tyler mentioned, I think that comes from, if there's one thing that Tehran and Washington may agree on, is they might not want to see escalation of military conflict right now. They'd rather keep this in the status quo and wait each other out, each side confident as time goes by, it gets worse for the other.
When you're looking at your models, Bob, what do you see in terms of, I know we see oil prices maybe potentially middle of the summer. Where do you see gasoline prices across the United States?
Well, you know, if we get up to a 130 Brent price, you know, we are probably making new highs, at least on a daily basis, in terms of average pump prices. So we're above $5 a gallon average, of course, much higher than that on the coasts. However, when we modeled, you know, let's lose Hormuz for July as well and don't get that oil back until August, then, Annmarie, you know, we're into a high $100 range, 175 or so Brent. Now you're well over $6 a gallon pump prices. So that's a dollar per gallon higher than the last high seen in 2022. So they're numbers the president doesn't want to see. My friend Kevin Warsh is going to do a great job, and White House colleague, he doesn't want to see, and his colleagues in the Fed. Those are numbers you don't want to see.
Well, then what do you think the domestic response would be from this president? Does he capitulate on Iran, or does he move some levers around potentially within the United States? Does, the rumors and idea of an export ban, say, come back?
Yeah, so we think when pushed, the president's not going to cave in, we think, on Iran. He feels deeply and strongly about nuclear proliferation in a way his predecessors have not, in our view. And this is legacy for him. He's not running again. And so we think it's more likely we will see military escalation. Look, in the near term, in the next few days, there's a decent chance, about as close to 50-50. We don't allow 50-50 odds at Rapidan. So we're sort of 40-60. We might get a framework that basically kicks the can down the road and avoids escalation. Okay, but if we don't see that over this weekend, it's more likely President Trump to end this blockage. He will resort to military pressure, with the goal there being raise the cost on Iran, begin to attrit their ability to stop those ships, hoping that they then will do a ceasefire that allow the free flow to continue or resume.
How high do oil prices have to get before you see actual demand destruction enough to offset, to become a sort of self-correcting cycle?
So we're already seeing a little bit even at these prices. It's mainly in Asia. It's mainly petchem. It's mainly airlines dropping rates and so forth. As we look elsewhere, we look at things like Rotterdam gas oil spreads. Those aren't in contango yet, so we don't see real demand destruction there. The weeklies in the U.S. are showing U.S. product demand is okay. So I think we have to go well into the mid-high $100 range abruptly. And then here's the key thing. You just were talking about equity markets here and all the optimism. I mean, at some point, there's going to be a decoupling. I don't think the equity markets can go up while oil prices are going up. And if you see that broad sort of capitulation in these financial markets to the reality of higher oil prices, I think then you'll start to see more widespread demand destruction throughout the economy. But right now, we've only seen a little bit. We haven't seen that much yet.
How much have some of the fiscal plans by governments around the world delayed, prolonged how long it's going to take to see demand destruction that could actually be the cure, at least temporarily and painfully, to the prices that we're seeing right now?
It's a big deal. I mean, governments have subsidized consumers. We have in the United States, it's coinciding with a big tax cut going into place, so fiscal stimulus. So fiscal subsidies and support has been provided, some of it planned in response to these high oil prices, especially in Asia, some of it not just coincidental, but it is definitely helping to sort of let the market skate by here for the last 2 months. Shock absorbers, fiscal stimulus, confidence that this is going to end soon. All of those things have sort of pinned oil prices to a level where equity markets can ignore it. Going into summer, if this continues, we think that wears off.
Hey, Bob, it's good to hear from you, sir. As always, thank you. Bob McNally there, Rapidan Energy President. We can keep going back to the same three options. Option one is maintain the blockade. They like option one. They're comfortable with option one. You listen to Bob there. Option one is not going to be an option in the next few weeks.
The idea of oil prices spiking to the mid to upper 100s is a different prospect that even AI can't really contradict. That at some point you will have to get some recognition of this in risk assets.
Also, it's easy to do verbal intervention when there are inventories. How difficult is it going to be when we get to the very bottom of those inventory levels? It's going to be hard for this White House to keep pushing prices down.
This right now is not what the stock market is focused on. This is what the stock market is focused on. We'll catch up with the Nyse president, Lynn, as Wall Street prepares for a series of blockbuster IPOs. Plus, your high risk got some morning movers. Ross Stores delivering an earnings beat. That stock is up by more than 4%. Two-day winning streak on the S&P 500, adding just a little bit of weight to the rally this morning, up by 0.1%, on course for an 8th consecutive weekly gain on the S&P 500. Haven't had a down week since March, just unreal. On the Nasdaq this morning, up another 0.1%. In the bond market, check it out, 2s, 10s, 30s. 30 still close to multi-decade highs, levels we haven't seen since 2007. Breaking away from them this morning, down by a basis point. 5.1%, let's call it, going into the swearing-in ceremony for Chair Warsh a little bit later this morning at the White House.
There are a lot of questions about who Kevin Warsh is, what his reaction function is going to be. In some ways, you could say that the committee set him up to do the difficult thing of removing the easing bias, despite the fact that the president is pressuring him to lower rates, at least previously had been. I know he has backed away from that just a little bit. Ultimately, the debate is a real economic one. Is this a market more primed for rate hikes or rate cuts? What is the appropriate path of travel?
Who is Kevin Warsh? Always the bridesmaid, never the bride, except for today. And what a moment it is for him, a difficult environment for him to come into this. And I know I've been talking about the president backing off, but how long can this last? Everyone I spoke to, when the president came in, the whole idea was to try to get interest rates lower before the midterm election. And now it might be the hardest time for a Fed chair to continue on that path.
This is a wedding the president will be attending.
Yes.
A little bit later
He'll
this
be
morning.
officiating this wedding.
Yes.
He's known him a long time.
You like that, don't you?
And
Yeah,
the
all right.
guests, the guest list is actually quite impressive.
Do you want to go there?
No.
Don't fancy it.
I just
I
did.
don't either. That's as far as I'll go. That's as far as I'll go. Counting you down to the oven about 2 hours away. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hey, John, we start with Ross Stores. Those shares are jumping 4.5% in the pre-market after it raised its full-year outlook and saw same-store sales jump 17% last quarter. That was a record and nearly double what Wall Street expected. It echoes what we heard from TJX earlier this week, that the consumer is increasingly looking for value. Turning to Take-Two shares, those are also rising in the pre-market, up 2.5% after the company announced that Grand Theft Auto 6 will officially launch on November 19th, easing investor concerns that we would see another delay with this video game franchise. That is expected to be the biggest entertainment launch of the decade. And we end on U.S.-listed Chinese tech firms Alibaba and Baidu getting hit in the pre-market after Beijing announced a new crackdown on cross-border investing, reigniting fears that China could once again take a tougher stance when it comes to internet firms like these, just as investors started warming up to the space because China had become more supportive of these firms as it tries to compete with the U.S. on artificial intelligence. John?
Yahara, thank you. Thank you very much. We should have a rule. You never talk about someone's family, but the president went there. We've got to talk about this. Describing your son as someone you've known a long time, it's just brilliant. Sometimes the president is just... Seriously, he's a comedian.
Oh, it's hilarious.
Yeah, I mean, to me, I saw all these pictures of people being like, you know, there's this kid, he's got a soccer game, but I've got a meeting.
Right.
You know, yeah. I've known him a long time. My son. I mean, look, for people who don't know, he was talking about his son's wedding, and he said he didn't know if he could attend. You know, I've known him a long time.
It's this weekend. So if he attends, there would need to be a lot of planning because apparently it's in the Bahamas. Originally, they wanted to get married in the White House. I think the president thinks the optics of that would be great. Also, the ballroom's not ready yet. And the president said he's going to get killed either way if he goes
because there's a war
or doesn't go.
Okay.
Yeah.
All right. On our radar this morning. Thanks for explaining it, Lisa. U.S. Secretary of State Marco Rubio arguing against Iran's push to create a permanent tolling system in the Strait of Hormuz.
I don't know of anyone in the world that should be in favor of a tolling system in an international waterway. That's just not acceptable. It can't happen. If that were to happen in the Straits of Hormuz, it will happen in 5 other places around the world.
Iran's discussions with Oman suggest a deal to end the war with the U.S. may still be out of reach. Elsewhere, the president swearing in Kevin Warsh as Federal Reserve Chair later this morning. Warsh taking over with a divided committee and the threat of rising inflation. And finally, SpaceX delaying a critical test of its Starship rocket just seconds before launch. Engineers blaming a hydraulic pin malfunction, the snag coming one day after Elon Musk's company filed publicly for what could be the largest IPO in history.
On one hand, you could say this is a pretty big setback, given that the ambition is to have 20 launches a day, as we were talking about with Pierre Ferragu earlier. On the other hand, you could say, is SpaceX actually a space company or is it a satellite company? And that has been where the revenues have been coming from. And frankly, those revenues have been skyrocketing. So at a certain point, again, it goes to the heart of what is SpaceX? Is it just a financing mechanism for the hopes and dreams of Elon Musk?
Well, they want to have AI data centers in space. And it's not just SpaceX that wants to do this. This is also a key takeaway for Jeff Bezos and Blue Origin. When I spoke to Blue Origin CEO a few months ago, it was just when they stopped doing commercial flights. Remember all the celebrities saying they went to space?
Sure.
Because this is what they want to focus on. They want to be competitive when it comes to putting data centers in space.
You know what's pretty cool? TV-wise, in a few weeks' time, these space events are going to be market events, and you can have the stock there as these things are taking off. I just think as a TV producer, that's pretty cool, right?
Yeah, it is.
Very cool.
Space is awesome, and I love the ambition and excitement. Like, I want to get excited about Martians again. I want to get excited about the idea of living on Mars.
Wasn't where I was going, but yeah. All right, me too. Let's stick with IPOs. OpenAI and Anthropic joining SpaceX in the battle for control of the multi-trillion-dollar AI market. I'm very pleased to say that joining us here in studio is the Nyse president, Lynn Martin. Lynn, it's good to see you.
Great to be
Fantastic
with
to
you guys.
catch up. I want to talk about all the success of your institution in just a moment, but one particular name that jumps out, SpaceX, and it's going to be on the NASDAQ. And they changed a couple of rules to maybe encourage them to go over there and not over here. What did you make of those rule changes?
Well, from our perspective, market integrity is not something that is a competitive dynamic, and some of the rules that have been changed to woo some of the large companies, you referenced SpaceX, are questionable. And from our perspective, what is most important to us is protecting investors, particularly the mom and pops in the market. And when you think about the ETFs and that they invest in and the rules that have been changed, it's a question mark.
Well, let's talk about the so-called seasoning period. So for the S&P 500, to enter that, I believe the seasoning period's about 12 months. For the NASDAQ 100, for these particular names, it'll be 15 days. What kind of complications does that introduce for individual investors?
So I actually think that the fast track aspect does merit a discussion. And I know S&P, for example, has a consultation out to the market today whether it should be 12 months or it should be 6 months. I don't know what the right number is there. I know that the index providers, particularly those that don't have conflicts of interest, are going to figure it out to the benefit of retail investors, allowing companies to be included in the flagship indices like the S&P 500 in a quicker form. So I think that is actually a good discussion to have. Rushing that type of rule change out, though, is in order to accommodate a listing is a question mark. I think the bigger thing, which you've heavily covered on Bloomberg, is the float multiplier. That should be looked at more closely. And I guess we'll figure out what happens in the next couple of weeks.
Can I follow up on that? So let's talk
sure.
about it. I'll be talking about some of these names, and I'll say they've got a market cap of like 2 trillion, whatever the number might be. The actual float, just how low is the actual float going to be?
I mean, I think the S1 is really what you should look at for the percentage of that will actually be floated. But what I'm referring to is the 3 times multiplier that NASDAQ in particular has put on SpaceX.
Just to give some context, people are worried that some of the new IPOs are going to have a disproportionate impact in weighting in some of the indexes. How much do you see that as a potential liability, especially without a longer seasoning period to really protect retail investors?
Yeah, I mean, it comes back to what I was saying earlier. It's about market integrity and the protection of retail investors. To be honest, I just don't know what effect this is going to have on the market, and something that economists have covered heavily. Economists, independently have covered heavily. So it'll be interesting to watch.
In the meantime, this is a real sea change when it comes to market dynamics, because we've talked about the shrinking IPO market and how the shrinking public equity space has really strained a lot of people's expectations of exactly how capital markets should progress. How much do you welcome all of the IPOs this year versus get a little bit concerned that it could overflow a market that hasn't been used to this type of supply?
It's been a good year so far for IPOs. I know that the big 3 that you flashed earlier are the ones that are getting a tremendous amount of attention, but there have been a great amount of IPOs coming to market already across all industries. And we're working with a variety of other companies to bring them public, too. I think that actually speaks to the diversification that is coming to market across all industry. You've got the energy markets, you've got the consumer names coming to market. Industrials are very much having a moment. So it's across multiple sectors. And I think that's actually welcomed by retail investors. They don't just want to invest in Elon Musk, despite the fact that he is, one of the great innovators in history. They want to invest, they want to have a balanced portfolio.
You just got to spend some time with Elon Musk.
And the president. I was just with him in China.
Yeah, I was on that trip as well. Can you pull back the curtain for us and tell us what Chinese officials actually told American businesses?
Yeah, I mean, the message that America was really delivering on that trip, I think it was the first time in history that an administration had ever brought 20 of the leading CEOs cross-sector of the market to a state visit. The message that we were delivering was that business could really be transformative in transcending geopolitical barriers and could play an incredibly important role and does play an incredibly important role in the geopolitical dynamic.
How do you see this relationship developing? Do you see Chinese companies at one point being able, more of them, coming onto American stock exchanges?
It really depends on the governance. One of the things that we're focused on is how our markets continue to be transformed over the long term, but we would never sacrifice the transparency that the U.S. stock exchanges in particular require.
Can we finish on integrity? Because it's something we've talked about repeatedly on this programme. It's been a sense, particularly with this war, in the last 2 months or so, that people might have information ahead of time. I'm sure you're having those conversations as well. I worry that if people start to believe someone's got an edge that they don't have, that they're trading on information that nobody else has, before it becomes public, that people would disengage and it will affect liquidity. These are the kind of things I'm sure you worry about too. How important is it to get to the bottom of what's been taking place in just the last 2 months alone?
I mean, one of the things that is very much focused on, and continues to be focused on, is anyone with inside information and market integrity. And I think our regulators do an excellent job at surveilling those markets to ensure that people don't have information ahead of the general public.
Are there conversations happening now to get to the bottom of some of the price action through March into April?
I mean, I think the regulators are continuing to increase the amount of tools that they have at their disposal. I think actually AI is going to present an amazing opportunity.
In what way?
It will present an opportunity for regulators to surveil markets at a much greater speed. It's something, actually, one of our first use cases has been deploying AI to surveil our markets, given the increasing messaging that we have at our matching engines.
Because you and I are both long capitalism. We've got a bias.
Absolutely.
We aggressively love capitalism and free markets. And I just wonder that people are losing faith a bit so far this year.
I don't think they're losing faith. I'm the eternal optimist, though. I'm the person that's going to see the glass as half full, and that's why it was such an honor to represent the U.S. last week in China to talk about the role of American markets. We just turned 234 years old this past weekend. We've survived multiple pandemics, wars, financial crisis, you name it. And every time our markets have become stronger, more transparent, more liquid. And that's because of the development of technology tools that enable price discovery to happen in the most efficient fashion possible, and enable our regulators to surveil those markets and continue to build that trust.
Are you concerned that if there is some sort of deflation of the enthusiasm around AI, that could undermine people's confidence in markets akin to what happened in the aftermath of 2008?
I think there has been a bit of a broadening out of the aperture of what is happening in the world today. So if you look at, coming back to your question on IPOs, some of the IPOs that have come to market are industrials, they're energy, they're infrastructure plays that aren't just focused on AI. Our grid needs modernization. And I think there's an acknowledgement in the administration that our grid has needed modernization for some time. So you actually look at great industrial companies, great energy companies coming to market that are going to benefit and are going to really drive that industrial revolution, the next phase of it,
Lynn,
be it AI or anything that's required in the grid.
A massive year ahead for you. It's always great to catch up. Thanks for getting some time.
Thanks for having me.
Thank you so much for dropping by. Lynn Martin there, the Nyse president. Equity futures right now in the S&P 500 slightly firmer. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Samsung is paying almost $27 billion in bonuses to chip employees this year. It's part of that last-minute deal with labor unions to avert a strike. Based on 2026 profit estimates, Bloomberg calculates the average payout per worker at about $340,000. IMAX is exploring a sale. The Wall Street Journal reporting the company has approached entertainment companies as potential buyers. The Journal is saying the sale process is in its early stages and may not result in a deal. Argentine football legend Lionel Messi joining the billionaire club. Messi's career skyrocketed after he received growth hormone treatment way back in his teens as part of his FC Barcelona contract. Well, according to Bloomberg analysts, he's earned more than $700 million in just salary and bonuses since 2007. And that is your Bloomberg Brief. John.
Evani, thank you. Thanks for the update. Up next on the programme, a changing of the Fed guard.
The new Fed chair, he's going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards, but the majority of the FOMC is going to keep their heads down, try to get through 2026.
Deborah Cunningham of Federated joins us next. Stocks are positive, up by 0.25% on the S&P 500. On the Nasdaq, up by 0.2% also. If you turn to the bond market, switch up the board and check out Treasuries. Going into a Fed event a little bit later on this morning. Two-year yields north of 4%, above the policy rate of the Federal Reserve, and having a little sneak peek of a future that might include a rate hike. Under surveillance this morning, a changing of the Fed guard.
The new Fed chair, he's going to have his work cut out just to stop the rest of the committee trying to push for higher rates. So any rate cut is off the cards, but the majority of the FOMC is going to keep their heads down, try to get through 2026, see how the situation in the Gulf finally resolves itself, and then see what the trajectory of the economy and inflation is at that point.
So here's the latest this morning. President Trump swearing in Kevin Warsh as the new Reserve Chair at 11 a.m. Eastern Time. The FOMC coming off the institution's most divided meeting in about 3 decades. Deborah Cunningham of Federated writing, Warsh is likely to uphold Fed independence and be guided by the data. He cannot afford to lose credibility. Deborah joins us now for more. Deborah, welcome to the show. Let's get to the June meeting. If they don't drop that easing bias, given what's happening with inflation right now, do they lose credibility?
Well, I think that's the first real test. I mean, I don't know that they lose all credibility at that point in time if they don't give to the market what it's expecting and wanting. But I think it takes a notch lower. So there's a little bit more to build back if they don't remove that bias. It's certainly based on what we saw from the minutes of the last meeting was contested as to whether or not it should have been removed then. It might have been an easier process to have done that, but that's history at this point. So we're looking to this next meeting, and the expectation is the bias will be removed.
Deborah, when you've got a fully seated FOMC, there's 19 members there. Voting members is 12. Can you just compare and contrast the hawkish, dovish makeup of each of those? Because we had Krishna Guha come on the programme earlier, and he said, yes, there's some hawkish pushback, but as the voting members of those 12, he said that's still pretty dovish.
I would say there's at least one, maybe two more on the dovish side. I'd say the majority of the voters are in the centrist camp. And what we see with the current change that will occur today, with Warsh coming on and taking, the Powell spot, and Powell taking the Myron spot. Powell still stays as a centrist. Warsh comes on in Myron's role as the dove, and the complexion really doesn't change. What is interesting is the makeup of the doves and the hawks. The hawks, for the most part at this point, are generally the regional bank presidents that are, the three that dissented because of the wording from the last meeting. Those are staying the same. Whereas on the dovish side, you generally have more of the FOMC governors that are in that space. But I'd say it's one, maybe two more on the dovish side, with the bulk being in the centrist side.
Deborah, given the fact that stock markets don't seem to think that this is a Fed that's going to hike rates anytime soon or ever in the next few years, do you think that it is an opportunity for short-term rates for investing in the front end of the yield curve that seems to be pricing that in?
We do. Honestly, we're looking at something that, we were concerned that we were going to go down into the low 3% and perhaps even, pierce that veil and go into the 2% two-handle range sometime in 2026 or early 2027. And from our own short-term investment committee standpoint at Federated Hermes, we no longer believe that to be the case. And so we've kind of rearranged where we think the most value on the curve is right now, and that stands with short rate products like money market funds, micro short type of products that are on the very front end of the yield curve that have very low risk, but are also looking at yields that are in the high 3% at this point.
Is this a political call that Kevin Warsh will be motivated to remain on hold for a longer period of time, that the threshold to hike is that much higher as a result of the political backdrop? Or is this a market call that inflation is going to come rapidly down, potentially growth also will decelerate?
I think there's a concern about both. The jury's out on Warsh. Everybody wants to, be behind him and expect that the independence of the Fed will be maintained. And if I go back to the original, sort of 5 candidates for this position, he's our pick. We're happy with this swearing in today. On the other hand, if you have inflation that continues to be influenced by geopolitical considerations and what's happening from a war in Iran and an energy price and food price inflationary environment, you might see the consumer start to pull back a little bit. The consumer has certainly been the leg on which this economy has been standing, and if that starts to falter to some degree, you've got something that could be a stagflationary type of environment where growth is lower, but inflation remains, kind of sticky. And I think both contribute, both the geopolitical side as well as the economic side contribute then to what the path of the Fed has to be.
It's a really tricky moment, without a doubt. Deborah, thank you. Deborah Cunningham there of Federated. An otherwise very conventional pick for a Republican president, Kevin Warsh. And if you go through the candidates, any one of them could have been a great Fed chair. Governor Waller, Rick Rieder, Kevin Warsh.
You made a really good point earlier, which is that regardless of what he does, it'll be viewed in a political lens. And that's the problem. And it's at a really uncertain moment. I mean, we can't emphasize enough. You can get two people, one who argues that it'll be a policy error to cut rates, another person who's going to argue that it's a policy error to hike rates, and they'll both have really valid arguments. At this point, he has to deal with that and people who are automatically skeptical of anything that he does.
The way the administration dealt with this has made it so difficult for an otherwise very conventional candidate to drive through reforms into this institution that needed to happen anyway. It was a kind of foolish effort to go after the Federal Reserve. I still don't know what they really got out of it. I still don't really know why they continued it coming into 2026.
Yeah, and it slows down the process, potentially leaving Governor Powell to oddly clean up the mess, right, which is sort of the strange issue here. Not
ideal. Coming up on the programme, we'll catch up with Alex Altmann of Barclays, Antoine Legault of Wedbush, Yelena Chudetseva of the Conference Board, and Earl Davis of BMO. The third hour of Bloomberg Surveillance, up next.
Right now, there's so much money to be made in the AI space.
I'm actually leaning into AI almost everywhere.
This is about risk management, but maintaining exposure to AI.
On the tech front, we still see structural opportunity.
It is very, very hard to just make the worst case scenario assumptions and make that your base case.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. The last hour going into the long weekend. Equity futures look like this. Positive on the S&P 500 by 0.2%. Up again on the NASDAQ by 0.2%. Also in the bond market, 2s, 10s and 30s. Hello, Kevin Warsh. 4% on 2s. 4.55 on 10s. Still north of 5% on 30s. Heading into this later on this morning. A swearing-in ceremony down in Washington, D.C., and this time at the White House.
Yeah, this to me is going to be quite the interesting era for Kevin Warsh. There are two ways to look at this. On one hand, you could say that 10-year rates right now are at the highest level for a Fed chair swearing in going back to, depending on the second, Ben Bernanke or Alan Greenspan. The other way of looking at it is he's dealing with a normal economy based on the previous decades, before the past couple of decades, and that he's dealing with a fast-growing but also more inflationary economy. either way you look at it, right now, he is not going to have an easy time giving a message of exactly what the Fed's role in all that should be.
And when you hear from the likes of Walmart yesterday, you hear that consumers are resilient. But at the same time, Walmart's coming out and saying if these rising fuel prices continue, you are going to see potentially a rise in inflation, and it is going to affect especially the lower income individuals. This is not the recipe you want as a Fed chair or as the President of the United States going into a midterm election.
I think you got some good news from the retailers, though, this week, Walmart and Kroger, just the idea that they're not passing through the higher costs. Just on that one dimension, I know that can change in the months to come.
Exactly.
But so far, you haven't seen the pass-through. And I imagine, just on a relative basis, you take a little bit of comfort from that.
Yeah, and the reason is because Walmart wants to compete for market share. And you're setting off as something of like a price war, which you're seeing, for example, Kroger is coming out and saying that they're cutting prices too. Two ways to read this. On one hand, they can't pass along the price increase. That is a positive with respect to the inflationary impulse. The second way to look at this is they have the scope and the cash to compete in this fashion, and it's very isolated to just this sector.
If it hits growth, I know what to do with that as a central banker, cut rates. You know, they always talk about central bankers as being incredibly brave in economic crises. Nothing brave about buying loads of bonds and cutting rates down to zero. That's just the obvious decision. That's easy. The really tough decisions are made in emerging markets where inflation pressures to the upside, growth pressures to the downside, and you don't know what the hell to do to defend your currency. What do you do? And to boost economic growth, you can't do both. You have to pick a poison. That's the challenge that a DM central banker does not want to deal with. It's a challenge they're not used to.
They're going to get laryngitis and just speak less.
Right, take the summer
less
off.
Communication.
Fewer press conferences.
Yeah, you know, just guys, figure it out yourself.
That's the era I want, by the way, and I hope Kevin Warsh can take us to that.
Kind of wants
a world where we don't do Fed specials anymore, that it's not this big event.
This is personal, John.
You don't have to talk about where interest rates are every single day, that you just move on.
That's
I hope that's the world we can get to.
A lot of people think that we've actually moved beyond a point of Fed control. I think I always want to see the Fed show because it's always fun and I enjoy it. So clearly...
You like the long days?
I do.
It wasn't personal, just so you know. Anyway, all right, it really wasn't. Coming up this hour, might have been. Alex Altmann of Barclays with stocks adding to the longest weekly winning streak since 2023. Antoine Legault of Wedbush as IBM surges on a new White House partnership. And Earl Davis of BMO making the bull case for Treasuries. We begin this hour with stocks rising as markets await the biggest IPOs in history. Alex Altmann of Barclays writing, the team is turning cautious on equities, sustaining their current upwards momentum. The risk-reward outlook for stocks has become more asymmetric to the downside. Alex joins us now for more. Alex, good morning.
Good morning.
Simple question, what changed?
A whole bunch of stuff changed, really. I mean, notwithstanding the fact that we had one of the largest rallies off the lows at the end of March that we'd seen in the modern era. And then also, we've been constructive on equities for basically a year now. We turned bullish last May. And then add on top, we've got like quite a quantitative framework that we use on a qualitative process. And stuff began flashing warning. Real rates being one dynamic. Spot vol correlation, which is sort of an evidence of euphoria by the retail investor, that's really ticked back up again. And then things like within the semiconductor sector, you've had this massive narrow breadth, obviously, within the market. You've had 10 stocks that have basically contributed the entire year-to-date rally. And then I suppose the last thing we've got to be aware of is the fact that we've had this big momentum charge in the market. And on all of our crowding metrics, that's become pretty stretched right now. And momentum's become very correlated to the market. So reversing that momentum unwind would probably take the market.
You know the obvious fundamental pushback that you'll get to these particular calls. The charts might look crazy, but if you look at the multiples are still okay. Yeah. They haven't expanded aggressively because earnings have been so good. That's the counterpoint. What's your pushback?
So I don't really have any pushback from a fundamentals perspective. And I came back from marketing in London this week, and I heard dozens of those kind of conversations. Fundamentals look great. Earnings season was amazing. What's the problem here? Fundamentally, I don't have a problem, but we have to understand that the average PE multiple when real rates are here is lower than when we are today. That would be point number one. Point number two is that this is much more of a technical call that we're sort of making right now. It's not a fundamental call. It's more the case that the market could get gut checked here from a momentum unwind. And that is what people are not positioned for. And I really want to expand on that point just for 1 second.
Sure.
Right? Because what's happening with Iran and oil, I mean, I got asked a question this week, can you think of a trade that is not linked to the price of oil? And right now, I can't. So effectively, we're still navigating that geopolitical dimension. And so in both an escalatory outcome, which would naturally be probably quite negative for risk up here, but also a de-escalatory narrative. And what that would do is would force a dramatic rotation from the 12 weeks of massive inflows into US equities, AI story. And I think it would move elsewhere, places which have been more energy import sensitive, such as Europe and UK and parts of Asia. And I think that natural rotation could actually take money back out of US equities and lead to some weakness.
For people who are tempted to be benchmarked to the extreme, to 2008, 2020, and the initial aftermath, after the COVID-related shutdown, what does a momentum unwind look like? Are we talking about a 5% decline in AI-related stocks? Or are we talking about a 15% true correction that is a reset for a lot of these names?
So I would take, there's so many bits to unpack there, which we don't have time for, but like within, for example, I would just take the vaccine day. Vaccine day in November 2020 is, for me, the analog that I want to go back to. On that day, S&P went up 1%, but equal-weighted S&P went up over 4%. NASDAQ, over a 36-hour period, went down 4%. And if what we did was we reconstituted that narrative, that analog, into today's market weights. We said, okay, if the NASDAQ went down 4% today, what would the S&P do? Because obviously we've had much more concentration today. And the answer is the S&P would go down. So it doesn't have to be necessarily a protracted multi-month reset in momentum. I think it could be a several-week sharp reset in momentum that would actually force that rotation, give a bit of a gut check to risk, remind people that it's not a straight line necessarily in bull markets, and then we can move on with our lives.
Is the bigger risk right now potentially some sort of resolution to what's going on in the Strait of Hormuz, or a prolonging or an escalation in the conflict that causes oil prices to go up that much higher?
So I think it depends what kind of money manager you are. If you're a long-short money manager, I would argue that actually it's a resolution that might be more problematic. Again, going back to that vaccine day narrative, everyone knew that a vaccine was coming. They just didn't know when. And so today, I wouldn't say everyone is convinced that we're going to get a resolution, but there is still a timing uncertainty. So it's very hard to pre-position for that rotation that inevitably would happen if you had a $20 drop in oil prices. But the former, of course, an escalation, that's just risk off. That's going to hurt both long-short money managers and, of course, long-only money
This is fascinating because 40 minutes ago, the president, truth, new stock market record. But you're basically saying U.S. equities are at this high because of what is going on in the Iran war, because we're in this Iran war.
Correct. So if you look at the leadership, and we've had virtually 100% of the year-to-date rally has come from a very narrow cohort of stocks. Those stocks, of course, have seen huge earnings momentum, and they're within this AI narrative, the semiconductor narrative, the whole CapEx build-out. But let's not forget the fact that people have been kind of forced there as well because they've been looking for narratives that have been oil agnostic. They don't want to be in European equities, which obviously was all the story for the first 2 months of the year. So if you said, I'm making this number up, a $20 drop in oil prices from a resolution, it's going to force that narrative to shift. It doesn't take it away from the AI story. It's just going to say, well, actually, that's run up 60%.
Well, what's the catalyst then for the upside in the United States?
Well, the catalyst, I think, for the upside is the fact that you've still got positive earnings growth. You've still got GDP running in the twos, of which 80 basis points is coming from AI. You've got a new Fed chair that's, well, even if remaining on hold, ultimately, yes, real rates are higher, but it's not restrictively so. I would actually say one of the biggest challenges to that narrative is we are going to have a new Fed chair. And on our work that we've done, which has been relatively well documented, that new Fed chair is typically tested or has a communication blunder within the first couple of meetings. We've seen that repeatedly. And a fun stat for you, going back to 1930, within the first 3 months of a new Fed chair getting installed, the S&P on average goes down by 12%. So keep that in mind too, with Mr. Warsh getting installed today.
Could happen today.
Well, I hope it's not going to be 12% today.
I hope it's not today.
No, I'm just talking about
asteroids.
I'm talking about a communication
Don't
blunder.
get Lisa excited. Goodness me.
Let's bring on the asteroid analyst.
Just my takeaway listening to you, how technically challenged we are on the long side right now, and how the situation in the Middle East, even if it resolves itself, I think this is a really important point, could unlock a vicious rotation that also catches people offside. And that's something you need to wait to resolve. So you kind of sat on the sidelines waiting for this to resolve itself now through the summer.
So, I mean, the way that I'm trying to position for it is that there's parts of the US equity market which I think thematically are still very interesting. Commodities, obviously, something we've talked about in the past. But I think it's just time to revisit some of the other parts of the globe again. For example, places that have been relatively beaten up because of the oil price. And we have to consider, what would a $15 to $20 drop in oil here, even if it's only tactically, what would that do to the relative performance?
So what would I like? Because South Korea is still crazy, Japan's still crazy. Outside of those kind of places internationally, where should I be looking?
Well, I think, so internationally, I would look back at Europe again. There are pockets, so for example, European luxury goods, very sensitive to, to the consumer dynamic as well. And then areas where there's very large short bases, for example, European autos, European chemicals, places where people have been actively using as a funding short to go against their AI longs. And then even domestically in the US, just equal weighted S&P. Just think about just diversifying away from just that AI concentration towards the other 493 stocks in the S&P. And that's something which we know, again, in Vaccine Day performed very, very well. And if we did have a redux of that rotation, it would probably benefit those kind of stocks.
Alex, this was great. It's always good to see you. Thank you, buddy. Thank you. Alex Altmann there of Barclays. We've said this a few times this week. If you speak to someone focused on the technicals right now, they're spooked by how quickly we've moved, and we've become very detached from the moving averages we've discussed over and over. If you speak to the guys who are focused on the fundamentals, they'll say, look at valuations, look at earnings, everything's okay. Two different stories, two different perspectives.
It goes to the idea that people have been hiding out in AI because they can analyze it when they can't analyze the Strait of Hormuz. And ultimately, when they can start to analyze the Strait of Hormuz, they might focus their attention elsewhere.
Maybe. Futures right now positive by 0.2%. Lisa excited. 12% move, single days, pandemic type stuff.
You're
there.
projecting.
GFC.
I meant
communication.
I meant communication
like that would be.
because we're likely going
awesome.
to hear from him today.
That'd be awesome, wouldn't it?
It would unlock value.
That's good. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Iran says the latest U.S. proposal to end the war is narrowing the gaps, but an agreement still seems far off. Iran is refusing to ship its enriched uranium stockpile to the U.S., and President Donald Trump says he opposes efforts by Iran and Oman to establish a toll system for Hormuz. Smart ring maker Aura Health filing confidentially for an IPO, seeking to capitalize on growing demand for its wearable devices. Source is telling us here at Bloomberg the company is working with banks, including Goldman Sachs, Morgan Stanley, and JP Morgan. And Stephen Colbert signing off for the last time as the host of his CBS late night show. The finale featuring actors and comedians, including Bryan Cranston and Paul McCartney, who closed the program with a performance of the Beatles' hit Hello, Goodbye. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. More from Yahara later this hour. Up next on the programme, the Morning Calls, plus Antoine Legault of Wedbush as the Trump administration prepares to add quantum computing stocks to the country's portfolio. That's next from New York City this morning. Good morning.
At the end of the day, the key to this business model is to get everything together. Vertical integration is really what makes you win. If SpaceX is IPOing in the next few weeks, and then after that you have OpenAI and Anthropic, I think it's going to keep us busy over the summer.
That was Pierre Ferragu of New Street Research joining us a little bit earlier on the blockbuster IPOs you can expect for the year ahead. Check out the market now. Bit of a turn here, up by a third of 1% on the S&P, higher by a third on the Nasdaq also. Close to session highs. Turn around in the bond market as well. Yields this morning were slightly higher by a basis point, now lower. We're down by 3, 10s at 453. 30s at 5.06%. Turnaround in crude as well. We were higher by 2%, now just about holding on to gains on WTI. WTI at 96, Brent crude at 103, searching for a headline to drive the price action.
Correct. I can't find one. Honestly, if you know why the Strait of Hormuz suddenly looks like it can be unlocked, please message, because I'm not finding it.
Isn't this the frustration, though, for people in this market right now? You see moves like that, you look at the charts, you start searching the wires, looking for a headline associated with that story. Every single time there's been a gain through March, through April, through May.
I need to train my agent better to go find it better. I mean, ultimately, it's going to be the agents that are looking for the headlines that then trade off of it, and the humans are just left saying, like, what's going on? I mean, at a certain point, how much is that part of the reason why, speaking to your point about capitalism, do people say, look, I can't get ahead of this. Somebody has the headline before I have the headline, and this isn't necessarily going on fundamental research, so I'm out of the game. I'm going long term.
It's also problematic with the headlines, given that what you hear out of Iran is from semi-official or fully official news agencies.
Yep.
There's no real reporting coming out of Iran that's independent. So that's when you're left to whack-a-mole, really, when it comes to these headlines. What are they saying versus what the White House is saying?
Brent crude still up around 1%. WTI just about unchanged now on the session. That's the price action so far. Let's turn to the morning calls. First up, Bank of America raising its price target on Ross Stores to $255, citing the company's first quarter beat and higher outlook. Your second call from JP Morgan, adding Walmart to its analyst focus list and keeping an overweight rating, saying the post-earnings sell-off is a buying opportunity. And your third and final call from Piper Sandler, raising its price target on Zoom to 107. The analyst citing vendor consolidation and price increases. Let's talk about those IPOs. OpenAI gearing up to go public, confidentially to file as soon as today. The race heating up for a historic pipeline of companies preparing to hit the public market. Ed Ludlow joins us now for more. Good morning, Ed. What are you expecting from OpenAI on top of SpaceX, on top of potentially Anthropic later this year?
Good morning. I mean, I am expecting, what I'm hearing is that this is real, that the confidential filing could be today or in the coming days, you know, through the holiday weekend in the US. Curious timing, right? You know, it's so interesting, John, like over the last 24 hours, I've been thinking a lot about what we talked about on surveillance yesterday, which is, in my world, they talk about the currency being compute. And in your world, or our broader Bloomberg world in aggregate, we're talking more about capital. And the capital markets right now are confronting a situation that's probably a little bit unprecedented in that there is not infinite liquidity. And so if SpaceX goes in mid-June, as we expect, and this is all real about OpenAI going in September and Anthropic going in October, you've got a big decision to make, right? There's not infinite liquidity. But the biggest take that I've had now, having had a couple of short nights to sleep on it, is read the S1 again from SpaceX. And the TAM number that they gave, $26.5 trillion for AI, they're basically saying we are called SpaceX, but our story is exactly the same as the one that OpenAI and Anthropic will pitch to the capital markets. That the opportunity going forward will be in selling software to other software companies, the enterprise, et cetera. So it's a difficult one to read. But as one investment banker said to me last night, what you write in an S1, you do deliberately and with intention.
Ed, thank you, buddy. I'm looking forward to the coverage later. What a time to cover some of these stories. Ed Ludlow alongside Caroline Hyde on Bloomberg Technology. Let's talk about another one. Shares of IBM rising once again. The Trump administration awarding the tech company $1 billion to build a foundry for producing quantum computing chips. Antoine Legault of Wedbush writing, that combination of frontier innovation and manufacturing scale is, in our view, how nascent technologies become transformative ones. Antoine joins us now for more. Antoine, welcome to the programme. I was looking at the price action yesterday and just reminded of what's happened with Intel through much of this year. How similar are those two stories going to be? Just the relationship between this company and the government?
Well, I think we're looking at passive equity investments, right? So the Department of Commerce is effectively institutionalizing a new model of government participation in strategic technology development, much like what we saw with Intel last year. And that creates aligned incentives, preserves taxpayer upside, and avoids, I think, the pure play or the pure subsidy optics that have historically made policy vulnerable.
Why do they need to be putting cash into some of these areas, given the enthusiasm around big tech and, frankly, even quantum computing?
No, I think it reflects the critical security, national security implications, and now quantum is being lumped into the same, same field as some of these other critical technologies, such as AI, or what we see with rare earths and other critical minerals that the U.S. wants to keep a really close eye on. So I think that's what it does, and that's a very powerful symbol or signal for the broader space. And that's why we saw much of the space absolutely skyrocketing yesterday, with stocks up 20-25% across the space.
Do you think it's appropriate for them to be picking who's going to be the winner and who's going to be the loser in a race that has been typically in the past, dictated by capital markets?
Well, I think what we saw is the U.S. government's willingness to deploy $2 billion wasn't necessarily on one single company, right? It was across the space. And we think we see it more as an endorsement of quantum computing as a strategic priority, as opposed to picking winners and losers. I mean, you saw companies like Rigetti, D-Wave, Quantinuum across a broad variety of modalities. So I wouldn't particularly say that they're picking a winner or a loser. I think they're taking a portfolio approach and expecting more than one winner as the industry matures over the next 3 to 4 years.
But do you think this helps or dampens competition within the space?
Well, I think it's, I don't think it hurts. This definitely doesn't hurt competition. It just simply provides capital to some of these players. And mind you, most of these companies are already well capitalized, right? Most of these these publicly traded quantum companies are already sitting on hundreds of millions of cash, if not $1 billion of cash with no debt. So that money helps. And if anything, it might compress timelines towards commercial mass production of these systems. But I think we're watching quantum kind of cross an important threshold. The competition will be fierce, and the space will consolidate over the next few years as we kind of move from scientific exploration and prototypes to manufacturing readiness and industrial scale deployment. So I think competition will remain fierce across the various modalities and across the various incumbents in the space.
Competition is fierce in the United States, but where is it also fierce in terms of geopolitical landscape? Who's behind the United States right now? Is it just China?
So there's a vibrant ecosystem in Europe as well. But let's be clear, China is a formidable adversary in this industry. The government of China has invested billions of dollars behind its domestic ecosystem, which I think also was a point of emphasis for the U.S. government to step in and further these investments in the domestic ecosystem here in the United States.
Antoine, appreciate your take. Thanks for joining us this morning. Enjoy the long weekend. Antoine Legault there of Wedbush. How many people bought IBM yesterday because they saw what's happened with Intel this year and the stock is up by more than 200%?
If the U.S. has a stake in it, they have a stake to keep that company going. At what point does it become a self-fulfilling prophecy? And are they picking winners and losers at a time where there still is plenty of capital for these companies? It's not as though these companies are starved for interest when it comes to investors. So is it necessary for the nation to get involved? It's a viable question.
I used to say this to the car makers, by the way. I remember catching up with GM a number of years ago. And they would come on and say things like, the demand for EVs is great. I'd be like, why do you need the subsidies then, if it's that good, right? And I think the same applies here to some extent. There's so much money going into the system right now. With Intel, it was slightly different. I understood the need to build out foundry capacity from a geopolitical perspective. I kind of understood that. And if the market was going to take the money there, then you had to sort of sacrifice the market at the altar of national security to some extent. And maybe you can make the argument for this as well. You just have to wonder how far they're willing to take that. And there are negative consequences associated with it.
Yeah, why not give grants that are competitive to new scientists who are coming up with interesting quantum computing models? Why not train young scientists to get involved? Why not identify talented kids and give them scholarships to go different places?
Because that's what the Democrats did, and they're taking a different approach in the Biden administration. Definitely taking a different approach.
A very different approach. Coming up on this programme, we'll catch up with Yelena Shuletseva of the Conference Board on the outlook for the US consumer under a new regime at the Federal Reserve. Futures up here by 1/3 of 1% on the S&P 500, higher by 1/3 of 1% also on the Nasdaq. You would have noticed a turnaround of this market, so let's talk about it. We'll go through things cross-asset and then get to what are the whys with an asterisk, like kinda. In the bond market, yields this morning were a little bit higher, now a little bit lower, down by 2 basis points on 10s. You'll notice a turnaround in crude as well, was up by 2%, now up by about 1 on Brent, and pretty flat as well on WTI. So do you want to do the why? Just explain to us some of the headlines that crossed in the last 15 minutes or so.
Well, they're saying that Pakistan's military chief, army chief, is visiting Iran, but we knew that yesterday. And also, I would think if this were true, yes, he's going there. I actually think prices should be lower because Pakistan is the mediator. So this is a good signal potentially of these two sides narrowing the gap and maybe getting to a deal. So I don't know. Doesn't make a whole lot of sense.
You mean oil prices should be lower?
Yes.
Okay, yeah, but they were off the highs, so they have moved lower.
Oh, okay, then this is
yes.
potentially
okay.
right. But again...
An endorsement of the price action.
Yes, okay,
right,
fine
okay.
then. But here's the problem. We knew this, so it's nothing new. We knew he was going to Iran yesterday.
One of my favorite part is when you take a look. So the Twitterverse is afire, ablaze with this and wondering exactly how to handle this. And the responses are great. So we're using this people, again, and somebody else was saying, well, it's Groundhog Day all over again, which gives you a sense of people's exhaustion.
Can we just get to the weekend? You know, seriously. I mean, honestly, it's just ridiculous. As we count you down to the opening bell, let's get you some single names. Some morning movers. Yahara has more. Hey, Yahara.
Hi, John. I agree. But we start here with Ross Stores. Those shares are up 5.2% in the pre-market after it raised its full-year outlook. And same-store sales were up 17% last quarter. That was a record and nearly double what Wall Street analysts were expecting. It echoes what we heard from TJX earlier this week, that the consumer is still spending, but they are being very value conscious. Turning to IMAX shares, they are soaring 15% in the pre-market on this Wall Street Journal report that the company is exploring a sale and has already approached entertainment companies as potential buyers. And looking at a number of analyst notes, they are already bullish on the stock, and they say a move like this could help unlock value for the theater company. And we end on U.S.-listed Chinese tech stocks. Alibaba and Baidu, they are falling in the pre-market after Beijing announced new crackdowns on cross-border investing, and that is reigniting fears that they could also crack down once again on these internet firms, just as investors started warming up to the space because China had become more supportive of internet firms as it looks to compete with the U.S. on AI. John?
Yahara, thank you. Thank you for the update. Thanks for this morning. Let's talk about the main event later on this morning down in Washington, D.C. Kevin Warsh set to officially begin his term as the next chair of the Federal Reserve, swearing in at the White House later this morning. Mike McGhee tracking events, and he joins us now for more. Michael, good morning to you. Just frame this one for us, the challenges that Kevin Warsh is going to face.
Well, that's exactly it, John. There's a lot of talk of regime change with Kevin Warsh coming in, but imagine a new president of the United States coming in and the cabinet remains all the same from the previous administration. It's not clear how much power he'll have or when he'll be able to demonstrate it. Nevertheless, here's what Kevin Warsh wants to do. We don't know how long it'll take him to do it or if he can, but he thinks AI productivity is going to be high so we can have lower interest rates. That's task number one. He wants a smaller balance sheet and possibly take us back to the era of scarce reserves, the so-called corridor system. He doesn't like forward guidance. He wants members of the Fed to speak less and stop talking about where they think interest rates will go at the next meeting. And he's also going to be looking to import new and different kinds and hopefully better kinds of forecasting models into the Fed to try to get a better idea of where the economy is. But as you mentioned, there are challenges, and chief among them is the war in Iran, which is causing inflation to rise. So although the president wants him to cut rates right away, the president's put him in a situation where he really can't. He also has Trump-caused credibility questions. With all the talk from the president about Warsh is going to do this, I want a Fed chair who's going to do that, Warsh is going to have to demonstrate some independence if he wants Wall Street on his side. There is opposition to the balance sheet plan. We heard from Michael Barr last week. We've heard from Chris Waller calling the idea of going back to the corridor system stupid. And then Fed officials want to speak. Members of the regional banks especially want to tell their constituents what they're thinking. So we'll see how long it takes Warsh to do any of this and what actually works out. Here's a calendar of what to watch. The big news is going to be the 17th of June. That's the first news conference. Fed's not going to do anything, so there'll be a lot of reviews of Warsh himself. We may get a Humphrey Hawkins this summer in July. Jay Powell decided not to do one. The next FOMC meeting after that is July 29th, and then August 28th. We all go out to Jackson Hole. We think Kevin Warsh will be there. We think he'll give a speech, and if he does, there's going to be an awful lot of attention paid to that. And then September 16th, we have another Fed meeting. So taking us through the summer, there are opportunities for him to make his mark, but how much of a mark can he make?
Mike, you made a series of really good points. The one I enjoyed the most, and I think it's an important one and isn't talked about the most enough, is the regional Fed presidents engaging with their constituents. There's some egos on Wall Street. We always think it's about us. We think they're speaking to us, for us, to help guide interest rates. They want to speak to their constituents, Mike. Is there a better way of managing that? Is there a better way of managing that? Because whenever we go through the list of Fed speak, they're always speaking all the time. You and I know why. But there's a sense that it's an overload for financial markets. How do you manage one and manage the other?
That's going to be a difficult task for Warsh to accomplish, to get people to cut back, because they do have their constituencies they want to talk to. Perhaps he will speak with them about being a little less predictive in what they're telling people. They can talk about the economy, they can talk about an outlook, but not say one way or another what their rate idea is. The model there might be Tom Barkin of Richmond, who generally says you can see a case for one, you can see a case for the other. And he doesn't take a firm position on how he's going to vote at the next meeting. And that might be what the best that Kevin can hope for.
Mike McGhee, thank you, sir. Appreciate it. You know how this works, Bramo. They go to a chamber of commerce somewhere in the middle of nowhere. They're speaking to constituents, and then all of a sudden the Bloomberg reporters showed up, right? Yes. Someone else has showed up from the bank. I remember when Governor Carney first took over at the Bank of England, and I think he went to somewhere like Nottingham or something like that. He went to a chamber of commerce somewhere. And I think it was Michael Saunders, who was then at Citi or Credit Suisse, I forget where. He turned up to ask a question to Carney. And Carney was like, what are you doing here? Right? Sometimes they want to engage with the people and we think it's all about us, and it's not.
And the conversations are incredibly different right now. And I think that's the key. Who do they listen to at this point, based on some of the feedback they're getting from constituents who are feeling crimped in different ways, versus Wall Street that has very different questions?
The optics are important, though. The credibility issue around that. I think it's slightly unfair for Kevin Warsh, but that's the environment that the president is largely responsible for, that he's cultivated as Kevin Warsh goes to the Federal Reserve.
Yeah, which, again, you've pointed out many, many times. Establishment across all aisles have really endorsed this person as being a traditional establishment candidate, and yet people are viewing him as ultimately being less credible when it comes to combating inflation.
It's going to take some time to work off that particular accusation. Yelena should have said for the conference board writing this, the incoming Fed chair will likely focus on changes to communication rather than an interest rate and balance sheet policy in the coming months. Yelena joins us now for more. Yelena, welcome to the programme. It will take time to execute some of those ideas, but what are the ideas that you've got in mind, the changes that we should expect?
Yes, good morning. I think, while we cannot really do anything about interest rates and the balance sheet in the near term, it will take time just to make those changes. The incoming Fed chair could focus on some changes to communication. That would include the dot plot, and I think I haven't heard anybody being happy about the dot plot. Really, when you talk to people, everybody has something bad to say about the dot plot, but it's still there. So I think maybe now is the time that they will reconsider it. So what I am worried about is whether they will change the frequency and the diversity of Fed speak, at some point. And I hope it's not going to happen, because the markets are very much used to a diversity of views and hearing from different FOMC participants. So this is something I will be watching very closely. There are other changes that could be made to the summary of economic projections in particular. The incoming chair wants to focus more on rules, on policy based on rules, rather than, giving forward guidance. So these are the areas that are most vulnerable to such views.
Yelena, you're talking about the removal of some of the Fed speak, and yet we got quite a bit of it. It seemed like people were fairly hawkish, didn't really endorse an easing bias, were entertaining the idea of some sort of rate hike, and then the minutes come out and really amplify that message. Why are they still maintaining an easing bias? What good is some of this communication doing if it isn't reflected in any kind of the formal policy?
I think it's just, waiting for the new chair to come in, quite frankly. I think they didn't really want to change policy, like the communication right ahead of Kevin Warsh joining the Fed. So I think June is the month when they will probably do it. And, we need to be somewhat more neutral given the risks to the both sides of the dual mandate, and obviously rising risks in terms of inflation. I think June is the month when Kevin Warsh, is at the helm of the Fed, and that's probably when the committee will decide to move towards more neutral stance.
How constrained is this Federal Reserve by the long end of the yield curve? The idea that 10-year yields have been shifting higher even as people price in the potential rate hike as soon as early next year. Do you expect some sort of Fed Treasury accord to come into fruition in the first few months of his term?
Nothing is probably going to happen in the short term. I think this is a more gradual move. The balance sheet policy in particular will take time. I understand that there's like some inclination, some desire for the incoming chair to reduce the size of the balance sheet, but that should come from regulatory changes, trying to reduce demand for reserves rather than, trying to introduce some scarcity of reserves. I totally agree that there is probably no going back to the old scarcity of reserve regime. So I think you should ask Waller today maybe about that.
Hopefully someone's there. Yelena, when it comes to the broader inflation picture, we're going to Memorial Day weekend, and we have pretty high gasoline prices, but do you see this stemming into other areas?
I think it will trickle down to other prices, particularly prices of food. Food uses a lot of packaging, and this is another area that may see the implications of, supply chain disruptions stemming from the war in the Gulf. So I think that for now, we don't see many changes in prices beyond those. But, as the summer progresses, we will see some trickling into core prices. At the same time, I think that we will see some demand destruction. So in a typical year, gasoline prices rise 5 to 15 cents per gallon from May to June. But when supply is tight, we may see a spike of 50 cents a gallon. So that would bring us to $5 per gallon nationwide. And I think that is definitely going to slow down consumer demand during the peak driving season.
No doubt. Yelena, thank you. That is a concern. Yelena Shudet's over there of the conference board. Let's give you an update on news worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. The opening of a new U.S. consulate in Greenland sparking protests as residents voice concerns about President Donald Trump's plans for the island. Hundreds of protesters gathering outside the consulate, chanting USA, go home. A runway at LaGuardia Airport remains closed through 6 a.m. tomorrow. Inspectors finding possible areas of concern following the discovery of a sinkhole at the airport yesterday. The runway closure leading to travel delays during the busy Memorial Day holiday weekend. And 1,000 lucky New Yorkers will be heading to the World Cup at a steep discount. Mayor Mamdani announcing a lottery program that will give fans tickets for just $50 with round-trip transportation to MetLife Stadium included. For the rest of us, it'll be an arm and a leg. That's your Bloomberg brief. John?
That's what they should all cost. I mean, honestly, there should be thousands of tickets available for $50 at this stadium.
I thought you were saying an arm and a leg. I'm like, yeah, I hope not.
No, Bramo, no, that's very Lisa-esque. No,
on brand.
They should have made tickets available for $50. There should have been at least a minimum amount of tickets available at the stadium for really low prices.
Bring the kids in. Be able
to
draw
the game.
in young adults who want to play and want to get excited about it, who have that real fan energy.
Forgive me because I'll sound like a broken record for the next 8 weeks or so, but what a missed opportunity. So short-sighted of FIFA to go in the direction they've gone in.
Yeah, they're nodding and they're saying, yeah, just look at our bank account because guess what? Right. We're making bank, so that's why you're not running FIFA.
Up next on the programme, setting you up for the day ahead. And a week ahead. I should. That's the one thing,
Yeah, you should.
Yes.
Yeah, be
no,
actually
thanks.
supportive of the sport.
It's so corrupt. The whole thing is right.
Ridiculous.
Just kind of it's kind of sickening.
Just to the degree of trying to just extract
just tracking some of the stories
whatsoever.
coming out of that institution in the last few decades.
We could go off on this tangent for a while.
I know. All right. Earl Davis is going to join us in a moment. He doesn't want to talk about that. He wants to talk about why you should buy bonds. That conversation next.
Market integrity is not something that is a competitive dynamic, and some of the rules that have been changed to woo some of the large companies, you referenced SpaceX, are questionable. And from our perspective, What is most important to us is protecting investors. To be honest, I just don't know what effect this is going to have on the market.
That was the Nyse president, Lynn Martin. Some pushback to NASDAQ and some of the rule changes they've made to attract some of the listings. One of those being SpaceX, something to watch in the next few months. Equity futures right now in the S&P 500 positive by 0.4%, near session highs into the opening bell on the NASDAQ higher by 0.4 or so. In the bond market, we'll spend some time on that in just a moment. 2s, 10s and 30s shaping up as follows. Yields down by 2 basis points on a 10-year, 4.55. Front end of the curve gets interesting for Kevin Warsh, soon-to-be chairman Kevin Warsh. The president said this recently, I'm going to let him do whatever he wants to do. That's the script. Now, I'm intrigued later when we get this signing in, the swearing-in ceremony, whether he sticks to the script, because you know the president struggles to fight the itch sometimes and might go off script.
He's known for patience and for script writing. So, let's see what happens. As we get close to the midterms, though, pressure potentially could mount. And this comes at a time where people are pricing in a rate hike.
Might go off script. You can almost guarantee the president's going to go off script. And what happens when a reporter asks, "Sir, do you want to see him?"
Do we get some Q&A here? This would be cool.
No, it's in the East Room and there's an audience. So I know executives have been invited, ambassadors have been invited. The president definitely wants to make this an event. Will he stop and answer questions? He might, and I imagine someone's going to say, do you want to see Kevin Warsh cut interest rates?
Very
What's
cool.
he going to say then?
11 a.m. Eastern time. Don't miss it. Maybe he won't, Maybe he'll hold back and say, let him do whatever he wants to do. You don't know.
I don't. You're right.
And if he does, maybe treasuries will rally because they'll take that as an endorsement of Fed independence. And
Who does?
At the long end I'm talking about. The front end, maybe yields creep a little bit higher again because he might hike. You never know.
Oh, easiest job
we're
in the
live.
world.
Okay. As we count you down to the opening bell, the trading diary for the week ahead looks like this. 10 a.m. Eastern time. Fed Governor Chris Waller will be speaking. Look out for that. UMich consumer sentiment drops as well. At 11 a.m. we've talked about it endlessly. The president swearing in, Kevin Warsh, a little bit later. Looking ahead to next week, of course, remember Monday is closed for the Memorial Day holiday. Davis Abimo says this about treasuries. The persistence of much higher rates from present levels is limited. Current levels provide an attractive entry point for maintaining or adding to 10-year duration. Earl joins us now for more. Earl, welcome to the programme. Some people don't want to touch the long end of the curve. What's interesting for you? I don't think Earl Davis can hear us. Either that or he's frozen. He looked a little bit frozen, didn't he?
Well,
it's a very long weekend type feel to this programme.
I think that people hope that that's what Kevin Warsh will do with policy.
Just kind of you're looking at the return monitor sometimes, just trying to figure out.
You just
can't hear me, can hear me. It's frozen. He's still with us. He's back.
Now I hear you.
There, Earl. Good to have you with us,
I
buddy.
am.
Talk to me about why you're bullish treasuries, please. Tell me why.
Yeah. I'll start with our thesis, and then the 4 fundamental reasons why you want to own bonds here or feel comfortable owning bonds. First, the range of 2025 for U.S. 10-year Treasuries was 390 to 480. We believe that would hold. It has held. Anything above 435, the midpoint, is a buying level. Anything below 435 is a selling level. We have been buying bonds 450, 460, almost bought at 470. And will continue to buy on any pullbacks. The 4 fundamental reasons that are supportive of that are: 1, if there is a resolution in Iran, you will get a rally in bonds, a relief rally. It'd be short-lived, but you will. 2, tax refund season is coming to an end, which means you will see a pullback in consumer spending and growth, and people will have growth concerns. We do not. I could come back to that later. And 3, people forget the 2 reasons you want to own bonds are for yield income, get the coupon regularly to pay expenses, and 4, for flight to quality. 1, inflation's not involved. So from a yield perspective, we are at very high all-in yields, very supportive, above inflation, real returns, underlying economy is fine. We feel comfortable buying then. And then the flight to quality. Once you have a resolution to Iran and inflation is on, let's say, the side burner, it's not off, but it's on the side burner, the thing we're watching at is the percolation right now in what's going on with Ukraine and Russia. Brings back a flight to quality without the inflation implications that was happening in Iran. So those are the reasons why you want to own bonds above 450, which we still are, 10-year Treasuries. We could see that very quickly going back into that 435 to 425 range. And that's our thesis, and it's held this year. It's treated us very well as active managers, and we think it'll continue to hold.
Earl, what's higher quality, the U.S. government or NVIDIA?
Great question. We would say, given the risk reward and that you're receiving a spread above treasuries, we would put NVIDIA then, because you're receiving a higher spread and it's very safe. Cash flows are supportive right now. In regards to what is ultimately better, it's the U.S. treasuries, because they print U.S. dollars. You'll always get paid par no matter what happens. NVIDIA is not printing any NVIDIA currency. So, but we like NVIDIA better than we would U.S. bonds because of the credit spread.
Earl Davis of BMO. Next time you're on, I'm just going to freeze.
All right, thank you.
Freak you out. Thank you, sir. Coming up next week, Steve Cheverone of Federated Hermes, the former New York Fed President Bill Dudley joining us, Mona Mahajan of Edward Jones, Amanda Lynham of Goldman Sachs joining us as well. All of that after a long weekend, and this a little bit later. Kevin Warsh, the chairman of the Federal Reserve, alongside the President of the United States.
Setting the stage for what could be a new era, not just for the Federal Reserve, but also more broadly for the economy. Are we entering a new inflationary moment that's going to cause a real challenge at the same time of weakening growth? Or is he walking into a transition period where he can then cut rates later, as many people in the equity markets believe?
And is he walking into a potentially incredibly difficult political environment? The president at the moment looks to be giving him some breathing room, says he's going to give him the space, he's going to make the right decision, do what he wants. But at some point, does that change?
We're going to have some movement in the Middle East over this long weekend.
The president literally said his son chose a really bad weekend to get married because she has a little thing like Iran going on. He's very busy at the moment.
Do you think that actually might have been an important line for the president?
Potentially, yeah.
Right?
Yeah, well, why isn't he going to his son's wedding?
Yeah, I don't think you're the only one thinking that, to be honest with you. Futures right now on the S&P. Session highs, Bramo, off the back of some of the headlines on the Middle East.
Yeah, I think that we should stick around and cover this extensively through the weekend.
The wedding. You want to do wedding coverage?
100%, wall to wall.
Okay.
No, I think that, just if anything happens, we'll be ready to come back in, right?
I will take a hard pass on that, if that's okay. I'll give that a miss.
Yeah, I think a lot of people are.
I think we should wind this show down immediately, all right? From New York City this morning, good morning. Thank you for choosing Bloomberg TV. Have a very restful long weekend. From New York City, this was Bloomberg Surveillance.